Testing, testing. 1, 2, 3, testing. Testing, testing. 1, 2, 3, testing. Does this thing go on Wednesday mornings? Is it even morning anymore if you're on the East Coast? I don't even know anymore. Come on down, you're the next contestant on The Tits Was Right. Oh boy. Oh boy. So folks, check this out. All right. So for today's show, we're going to do something a little bit different because we had the big stream yesterday and talked about all those plays and all of those trades yesterday that we were looking at that ended up absolutely rocketing. So that was awesome. So for today, I promised the Discord members that I was going to do a lesson on what fair value gaps are. Because I've been getting a lot of questions from people asking about what those fair value gaps are. So I figured I would spend some time going over that a little bit. So for those of you that are not in the Discord, you're actually going to get kind of like a little bit of a preview of what we do and what we talk about in the Discord as far as the educational side is concerned. So that's going to be at the end of today's discussion. So what we're going to do is I'm going to start off with SPY, and then we're going to go through some of the other trades that we had going on, Nike, Siri, Intel. What else? I thought there was something else. We can also talk about Las Vegas Sands, but I want to just get through that really quickly. And then I want to get through some of the small cap trades that we've been on. From Grove, Chewy, Unity, IEP, APLD, CRSP, Corsair, DJT, things like that. All right, so I want to rip through those things, and then once we're done with those things, we will get into the fair value gap lesson. Okie dokie. So that will be the plan. That will be the plan. So let's start off with SPY. So last night we got some news that the tariffs on China are in fact not going to be 145%. Listen, this is the environment that we're in right now, where the president and people associated with him can say anything that causes the market to go both big up and big down. All right, so this is just the moment in time that we find ourselves in. And the reason that a lot of people are staying cash heavy right now is actually because of that. Not because Trump is stupid or shitty, or not because Republicans are stupid or shitty. It's just because there's a lot of back and forth right now. Right? It's like bulls take their turn, bears take their turn, bulls take their turn, bears take their turn. And just this like constant back and forth is just, it makes people who are sitting on the sidelines want to continue to sit on the sidelines because they have that fear and uncertainty of like, well, what if I buy today and then everything goes down tomorrow because he says something? Or what if I sell today and then everything explodes tomorrow because something happens, right? That's the risk that, you know, as a trader you take, but a lot of participants in the market are not necessarily traders. They're just investors looking to buy value. And value is hard to buy when you have so much uncertainty or fear about what is kind of happening in the market. All right, so that's kind of what we have going on right now. And so with the SPY right now, all right, what we're seeing take place right now is, once again, I'm talking about the Fibonacci's that I've drawn from the all-time highs to these most recent 481 lows. And you guys can see we've now run right into that macro 0.5 Fibonacci, all right, at 544. And then arguably even more important is this prior high right here at 548. Right now, the reason that that is so important, right, is because that high right here, okay, that signals the lower high within this trend. Now, this trend is very small, right? It's only about 3 months long. But having said that, you have an established high, an established low, an established lower high, an established lower low, an established lower high, and now we don't know like what is happening right here, right? So the big thing that needs to be accomplished, at least within this trending range of price action right here, is we need to see either this high broken, right, at that 548.60, I think is what it is exactly, 548.62. You need to see 548.62 broken, right? And until that break occurs, we still have this downtrend and we have to be extremely cautious. Now, if we open up our indicators, more specifically our MACD and our RSI, if we look at our RSI, we have that big inverted head and shoulders on the daily, right? And that's what kind of got us thinking like, hey, maybe there's some bullishness here, right? And that came off of the back of that test of that 236. Now, we obviously had concerns about Tesla's earnings, right? And what may or may not happen with those. But we took some risk on some other trades, which again, I'm going to go through. But this right here kind of gave us a little bit of a hint or a clue as to what may happen. Now, those of you that have been with me for a very long time, or even for a small amount of time, know that I have spoken about the importance of the center line of the RSI ad nauseum, right? And you'll notice that on SPY daily, as well as SPY futures on the daily, that we are currently resting directly on that center line of the daily RSI. So if we want this thing to turn bullish, right, there's really two things that need to happen. First, we need to break this lower high of this trending range at that 548.60. And then the next big thing that needs to occur, and obviously I would make the assumption that this would occur when it happens, is that you need price to break through that. And when that breaks through, you're very likely to see the daily RSI also break through the center. And that would be our first break through the center, right? Bullish break through the center, since all the way back here in January, in the middle of January last year, or excuse me, this year. Fuck, I don't even know what day it is right now. So, and the last time that we did that, you did catch a nice healthy move up on the S&P 500, right? A nice $18.50 swing, 3% on SPY when we were up at those highs. So that's really what I'm paying attention to right now with the S&P 500. I'm not bullish yet, right? Because there's still a large number of things that need to occur, right? Daily RSI needs to break through the center line. We also need to break the prior high of this trend. And then we also, one thing I didn't talk about here yet, we also have a MACD cross below the center line, right? And you've got some good momentum behind it. You guys can see that those bars that we have printed so far today are higher than what we even printed back through these two little mini runs that we had so far. So this is good, right? So we're seeing a decent amount of bullish momentum. We're seeing a decent amount of bullish strength. But the problem is that from a technical perspective and from a trend perspective, we haven't done anything, right? We just haven't really broken anything of significance quite yet. So that's why I'm just being really cautious and patient at this current juncture in time, because I haven't seen us break those technicals quite yet. Okay, so I'll just ask the chat box here really quickly. Does everybody do you guys understand what I'm talking about with that? Do you know like what I'm trying to apply and try to hint at with that? Does that sort of make sense there, folks? All right, good. Good. Now, just for just for the bearish side of things, just to be extremely cautious like we have been, you still have that daily death cross on the S&P 500, right? You do still have this bearish death cross on the S&P 500 here. And then what's really interesting, again, if you're in the Discord, this is something that I talk about with moving averages. That 50-period moving average is about to slice through that golden pocket. Wow, look at how perfectly I drew that circle. Isn't that cracked? Damn. That 50-period moving average after the death cross is about to slice through that golden pocket. Typically, when moving averages cross through important supports or resistances, that is also used as a type of trading technique as confirmation of those trending moves. All right, so when you have a death cross and the moving average slices through a golden pocket of that trending move, oftentimes traders will say that that is confirmation of this bearish trending move. You can say the same thing about bullish breakouts. Oops. So let me just, I'll show you one here at the end of the bear market. So if we pull a Fibonacci from the top of the bear market to the low of the bear market, okay, we'll just drag that across, okay? And then you guys can see that we made this nice healthy breakout, right? And you got this nice golden cross back here. Okay, that was a nice golden cross back here. And then price made higher lows, right? To allow that trend to continue after that golden cross came through, right? And then you guys will notice, okay, two things here. Let me erase this and then let me erase this and get rid of this and get rid of this. Okay, so you guys will see that right here, now I know this is in the way. Oops. Sorry. So you guys will see that the golden pocket taken from the bear market high to the bear market low, right? That's this golden pocket right here. You can see that the 50-period moving average crossed it right about here, right? Let's just draw a vertical line right there. And you guys can see that we did get a nice healthy momentum move, right? Another 2.5% on the S&P 500. And then we made this retracement, which ultimately ended up being a higher low of this trend. And you guys saw the harmonic I drew on there, but that's not the purpose of this. It makes this retracement, right? But this was supposed to tell us that it's confirmation of the bullish trend. Well, that confirmation, right, did ultimately come to fruition, but it just took that retracement during that little period of time, right? And then you'll also notice that once we got that retracement and it finally bottomed out here and then broke back above the golden pocket and both of the moving averages, what happens next? Well, look at, then your 200-period moving average breaks through the golden pocket, right? It crosses through the golden pocket. And if you draw a vertical line from where that happened, look at the confirmation, right? The 50, little less reliable, but when the 200 did it, look at the strength of that move, right? So this is something, like, in my opinion, now I know that we're already keeping a very close eye on it, but this is something that you will want to pay very close attention to, is where that golden pocket is and where that death cross is occurring. Because if that death cross does in fact cross through that golden pocket, it really could be the confirmation that we are searching for of this potential bearish market move. So just keep that in mind, all right? And that's a fun little kind of moving average lesson for that, all right? Is there a reason to use the SPY over the ES? I use both. I use both religiously, but people... How about this? Not everybody knows what the ES is or what SPY futures are. So I just try and keep it simple for most of the people that are listening. That's all I try to do. And then also, just to finish off that conversation with SPY, we drew this yesterday, right? Talked about how this could potentially be a 3 rising valleys pattern, just on a much more macro scale, right? And we are actually kind of seeing that come to fruition so far. So very interesting stuff taking place on the SPY. So everybody with me so far, can I move on from the SPY discussion? Everybody kind of have a rough idea of where we are market-wise and how to kind of approach, you know, with your mindset, how to approach this. Are you guys good on this end now? Because I've got the fair value lesson all set up, so we are gonna finish with that once I'm done looking at these other stocks and plays that we've had going on this week. So let's get into some of the bigger stocks and trades that we've kind of had going on this week. So let's just start with the big dog ones. So NVIDIA from earlier this week at the Golden Pocket. We talked about how it was kind of risky, obviously, to long it before Tesla's earnings and all that. But you guys can see the long at that Golden Pocket worked out beautifully. I don't have much to say because I really didn't like trade this one all that seriously. So, the next important one to talk about, we can talk about Tesla here really quickly. The ghetto spread that we took for Tesla is actually worth more yesterday on that IV pump than it was at any point today. I believe the Tesla calls are currently trading at 280, I want to say. So this ghetto spread did end up working. It was just way less profitable today than it was yesterday. So, and you guys can also see, again, just based on Tesla's chart, the arrow pointing to this big green area of resistance where we have found some hard resistance at before. Tesla has still failed to get back above that. So still lots of work to do, still a big death cross there. RSI still below the center line as well. So you guys can see like even some of the Mag 7 stocks are not showing that level of strength that we kind of want to see if we're hoping for a SPY breakout, right? Next stock on the list is Nike. So Nike was up like 3 or 4 or 5% earlier today. It has come back down to 1%. Still holding up extremely well. I don't care if this comes back down to 50. I don't care if this breaks out to 70. I just think where this area is right here, regardless of the harmonic, I think that this is just a really good value zone. And we're seeing some great reactivity on these lows. So I'm very happy with what we've seen on Nike so far. All right, very happy with what I've seen on Nike so far. Good little sort of kind of failure swing that's working out. Good MACD cross below the center. RSI, you know, you're out of the bear zone, but haven't really accomplished anything of significance. So still a lot of work to do here, but I really like what this has managed to do so far. Siri. So Siri, again, long at that like $19 to $20 range. So far held up extremely well. It actually made a new high since our entry this morning at 2180. I'm obviously looking for it to go much higher, at the very least testing this 236, and then I want to see us get to profit target 1, if not profit target 2. So I'm very happy with what we've managed to see on Siri, Nike, and then I'm also going to talk about Intel here. But Siri, just realized that Siri has earnings on Thursday next week, so going to be a very important earnings week next week for Siri. And guys, just make sure that you're making smart decisions, right? If you can't handle what a gamble on Siri might look like for earnings, don't be afraid to lock in profits. I realize that it's not that much, right? I realize that it's only like 10%, but 10% is better than minus 20%. You know what I'm saying? So just make sure that you guys, you know, kind of manage your own risk tolerance through this period of time. All right. DR1957 asked quickly on Tesla, why is it less profitable today? So he asked, why is the Tesla option less profitable today, even though it made a huge move? 2 reasons. Number 1, it's out of the money. And then number 2, IV crush. So essentially what happened is the market was pricing in very close to this percentage move. So when this percentage move takes place, essentially the IV kind of starts to crush. And then because your calls are out of the money, they're more prone to that IV crush, right? So in order for these to be worth like a lot more than they were yesterday, you actually kind of needed Tesla to get way closer to 270. Now, don't get me wrong, 260 is not bad, right? But what we saw yesterday is the IV was significantly higher. I think we actually still have it open. Yeah, so Tesla's IV yesterday was 78.6 when we were looking at those. It is now currently 64.5. So you guys can see the significant drop in the implied volatility, which has crushed a large number of those out of the money calls and puts. Right, so that's why they're worth less today than they were yesterday. That's basically the main reason. Why is every whole number such a pain in the ass to break? Just psychological. And don't worry, we'll talk about GME here too briefly. Okay, so last one for the big dog stocks that I want to get through with you guys that we talked about was Intel. So you guys watched us buy this thing live on stream when we were down at this $19, $18 lows, because I told you guys that this support box has led to several big moves on Intel even before its earnings. So if you were on Intel back from these lows and you've caught this move, you have a decision to make, right? Do you think the market's going to keep going up? And do you think Intel can beat its earnings and be positive for earnings? If you're scared, right, then make sure that you're taking profits, right? You're at resistance and you have reason to take profit. So make sure you're making smart decisions. If you're willing to have some risk tolerance, right? I mean, you've got a great entry. And now we're just looking to see if this thing can really break out and do something silly. I had some people ask me yesterday, what do you think about the 20,000 workers that were laid off for Intel? That right there is bullish news for the company. Obviously not bullish for the workers, but bullish news for the company in the sense that the company is serious about cutting costs, right? And they have to lower their workforce because the business just isn't working right now. So they need to start, cutting costs. And how do I say this? What's the word I'm trying to think of? It's not just about cost cutting, right? Because they need to basically tighten their belts, and they need to make sure that what this company is doing is now purely focused on the business aspect. They need the best workers. They need everybody doing their jobs at the highest level. And so if that means that we've got to remove some of that workforce, right, and rely on some of the I'll say more technical workers or the more skilled workers, then that's just the way that it will have to be until that business has become fundamentally stable again, right? It's kind of like what GameStop has been doing, right? GameStop had to cut a bunch of stores off and they had to lay some people off and they had to be really diligent in the way that they spent their money, right? Intel is in a very similar position, except GameStop is at the end of the trimming the fat stage, whereas Intel is kind of like just getting started with restructuring this business and getting it back to where it was, right? So that's kind of what I think about the layoffs. I don't think the layoffs are a negative, and I mean, you guys can clearly see it didn't impact the share price in a negative way. So I really think that this thing is just at such good value. And that's just where I lie on this chart. And so we've had a great trade on this thing, and now people can make their decisions as to how they want to approach, finishing this trade, whether they want to hold for the long term or whether you just want to cut a nice little 10, 15% gain, right? So, that's it mostly for the big dog stocks, folks. Anybody have any questions on anything that we talked about there with the big dog stocks or any of the other big dog stocks? Yes, I'm still in Kohl's. I'm just getting absolutely destroyed on it. So I'm collecting a dividend, which is cool. But yeah, I'm still getting ass pummeled on this thing. But I'm holding it. The indicator targets are still there, and this thing can still make a comeback. It just... bleh. Can you do SPY? You already missed it. We did SPY first thing. All right, so everybody with me so far. SPY very close to making a new low of the day. SPY very close to a new low of the day. So everybody with me so far, folks. You guys all got this part of the program on your show. You guys all kind of understand what I'm trying to throw down. Draw that there. Change that color. There we go. All right. All right. Okay, you've been doing covered calls. That's a really good idea. That's a really good idea. On Kohl's. That's actually, I don't know why I haven't been doing that. I might be fucking stupid. Wow, you just brought up a really good idea. I might actually have to start. I don't know why I didn't do that. You're actually smart. Why didn't I do that? Maybe because I thought the calls were cheap, too cheap. I'll have to look at that. That's a really good idea. I hate you. Why are you so smart? Don't do that. Okay, so now let's talk about some of the smaller stocks that we've been kind of running or trading. So let's start with Grove. So Grove still hasn't really done anything, so not too much to say on this end. Chewy, I have taken my profits on Chewy. I don't know if I trust this breakout. I do think it can ultimately go higher. I have locked in like 80% of my position, so I'm barely holding anything remaining on this. Caught a nice, I think it's 20% or something. Yeah, just under it. So caught a nice little trade on Chewy. That was cool. Do I think it can go higher? Yes. But I have a very difficult time trusting the market right now. So that's why I've kind of locked in a large amount of profit across the board on all of these things. But Chewy still looks okay, still above the center line, still above that trend line that we kind of drew over here. SPY getting a little suspect. What the fuck was that? Chat, anybody have any news on that? What was that? What's going on there? What's going on there? Anybody see anything about that? What was that? That's a big candle down on SPY there. That's got to be from some sort of discussion going on anyways. So that's what we have going on with Chewy. I've locked it in for the most part. I want to see it trend above this line, and then maybe I'll look to re-enter. But this Head and Shoulders still kind of spooks me out a little bit. So I'm just being cautious, right? And so that'll be the theme for most of what you guys hear regarding my positions on a large number of these small cap trades that we're looking at. So Mystery Meat here says, Besant declines to comment on the Wall Street Journal story on lowering tariffs on China, but would not be surprised if they went down in a mutual way. What? What? They're going down on each other, guys. China and America are going down on each other. Did you guys hear that? Besant, listen, I didn't say that. That's what Besant said. So I don't know. Interesting. So almost there at that harmonic butterfly completion. What I should do actually is probably draw a big fib here from that low to that high and see where that puts us. 236 is still a long ways away. 536.50. Oh, that's that same level. 536.50. That's where did that big Fibonacci go? There it is. Why did I draw it all the Oh yeah, because I was showing you guys. I remember. There we go. I was like, why is that all the way over there? All right. Sorry, I just want to keep an eye on this. So next one on the list is Unity. So Unity continues to trend above that golden pocket that we marked off. It's above the daily 200. It gapped above it, but it ran directly into the daily 50. So this $22 level, 21 to 22, this is going to be massive for Unity. If Unity can break above this, we should be able to get to profit target number 2 on Unity, which is right here at 23.65 or 24 in that ballpark. So that's off of this bullish shark harmonic that we had right here. So Unity, really nice bounce since the completion of that shark. Look at that, 36%, pretty cool. So Unity is looking really, really nice. Loving the gap above the daily 200. Now I really, really, really want to see it trend above like 2050. That would be really important. By the way, SPY is just taking a little bit of a shit here. So watch out for SPY to complete this bullish butterfly harmonic 537.95. 537.95. I would probably just look for it to wick right here. I'd probably just look for it to go right there if it continues to push down. That's what I'd look for. It just seems logical. And we'll just move this over there, and there you go. All right, so that's what I'm looking at on Unity. I've been holding this thing since we bought it back here prior to earnings. I didn't sell anything when it went to 29, except for the options I was holding. I didn't sell any shares when it dropped to here. So this is still where my cost basis is. I have no real fears or concerns, at least not yet. I still think this chart looks really good. I think the stock looks really good, and something could eventually happen with this thing. So I'm very happy to hold it. It's above my cost basis. I'm making money. Meh, looks good to me. SPY is taking a shit. SPY's taking a big doo-doo. Big doo-doo. 538.40 now. So very close to completing that harmonic. Very, very close. So watch for that harmonic completion there, folks. Big bullish butterfly harmonic structure here on the SPY. So let's see if we get that reaction, maybe even go to that 236 that we've circled here. So that's Unity. All right. Next one that we have on our list of stocks that we have been trading is IEP. So I also locked in a heavy amount of the profit on IEP. So I told you guys, bought it at 750, was going to sell it at 886, 17.75%. GG, nice and easy, light work, right? Nothing to hate about that thing. I think the harmonic just completed on SPY. They were very, very, very close. Very, very close to completing. So IEP got that 17, 18% move that we were searching for, got to the indicator target. It is now filled it, completed it. Great. I have taken my profits. I've moved my stop losses into profit on this thing just below this low right here. So I have the thing set at 845 for my stop loss on this now. So this is either going to continue to make me money or I'll get stopped out and make a little bit. Either way, very happy with what has transpired on IEP. Don't really care about the dividend. Yes, the dividend is nice, especially for the share price, and this is a decent company. But again, I don't know how much I trust holding it like long-term for right now, again, just due to the market conditions. So I took my profit and ran on this thing. SPY has now officially completed the first leg of that bullish butterfly harmonic on SPY there, all right? So that's IEP, APLD. Same kind of story. Again, you guys can see the drawing that I'm kind of expecting a back test on this harmonic completion and then looking for a larger leg up on this thing. So I'm still just being really patient, but shout out to Sammy for this one. Over the last couple of days, it had a really nice 10% pop there. So that was really cool. Next one on the list is CRSP. So CRSP did not hit my $41 indicator target yet. It did hit a new high since the entry back on that golden pocket. If you were taking a new entry on that golden pocket, it did hit a new high, but it still did not hit that $41 indicator target. So still being really patient and waiting for it to get there. Haven't touched this thing even a single dollar yet. All right, looking at the indicators, you have broken the center line. Right? Very, very important step. And then your daily MACD over the next day or two is very likely to cross through the center line, giving you a nice, healthy momentum move. So this looks really good. Like, I really think that CRSP looks good. We just need that healthcare sector to kind of perform better, right? Because we have seen the healthcare sector kind of been shit lately. So if we want to see CRISPR make a nice, healthy move, we need to see healthcare and just the general market be a little bit stronger. All right, so that's what I'm looking at for CRSP. Let's talk about two of the bigger ones that we've also been looking at recently. So we'll talk about DJT here briefly. So I told you guys over the last couple of days that once we broke this 236 here at 2050, right, I wanted to see us head towards that indicator target at 2680. And we have now broken the 382 at 2475. And guys, I feel really confidently that DJT is going to get to 2680. What happens after that, I don't feel nearly as confident because you'll still be below the daily 200 period moving average after a death cross. So that's something that I am paying attention to, but I feel extremely, extremely confident that this is going to get to 2680. All right. So this looks great. This looks like DJT looks really strong for that move towards that $26, $27 range. Okay. All right, so everybody with me so far? You guys all kind of with me so far? I just want to make sure the chat box is so quiet today. Everybody's sleeping. Maybe if we just talk in a light voice, that'll make everybody be like, oh, okay, it's fine, it's fine, it's fine. Everything's fine. It's going to be fine. Oh, there they are. There they are. The chat box has arrived. So that's what I'm looking at for DJT. Now, let's talk about the biggest one that we've had so far this week, Corsair. Look at that, folks. Look at that. From where we bought it live on stream 2 days ago. Look at that. A nice 22% move on Corsair. Absolutely beautiful. You love to fucking see it, folks. So Corsair, we had that bullish divergence we talked about, that potential inverted head and shoulders on the 4 hour, which has broken out in a pretty significant way. Have you achieved the full profit target? Let's see. Arguably, yes. So I would say that for Corsair, don't be afraid to take a little piece of profit off of the table. I have, and I've moved my stop losses up. And then what I'm ultimately looking for is if the market does stay strong, we need to break this 236 at 708, and then we'll have an 80% chance of that 382. All right, at $8. And then you guys can see the two separate indicator targets above at $9.60 and $11. So from where our entry is to profit target number 1 is going to be 42%. To profit target number 2, it's going to get you 68%. And then to profit target number 3, that's 93%. And then also, don't sleep on the fact that this could potentially be a bump and run. The pattern itself looks really interesting, guys. Really, really, really interesting. So continue to keep a very close eye on Corsair, because this thing it looks very, very, very interesting, folks. And I'm very happy with what we've pulled off on this thing so far. RSI is right at the center line. So just like what we talked about with SPY, you guys know what we need to see. It needs to dust that center line. In order to get through that center line, right, we need to continue to see some bullish momentum. So that's what I'm looking for with regards to Corsair. Okay. Tyler says, is Tesla detached from reality? I don't get it. Well, I'll make it easy for you. The stock market go boom, Tesla go boom. And I don't mean to make it as simple as that, but like truly, that is how these things function. And I know people are going to say, well, Tesla had a double miss. It missed revenue and it missed its EPS. How does the share price pump 8, 7, 8, 9%? How does that happen? Let me try to, I don't want to say dumb this down because that's not the right choice of words, but let me try to make it like a little bit simpler to understand. The entire market thought that this Q1 for Tesla was going to be fucking terrible because of all the political stuff and the writing Nazi stuff on Tesla vehicles and vandalizing Tesla dealerships and all this other stuff. People assumed that Tesla's Q1 was going to be horrendous. And don't get me wrong, like it wasn't great, but it also wasn't like nearly as bad as people were kind of anticipating. And I think that's why we kind of saw no real reaction on Tesla during its earnings until we caught that news about the China tariffs, and then everything kind of started to like gap up, right? So, I mean, here is the simplest thing that I can say, guys. Here's the simplest thing I can say. I preach to you guys every single day that the chart tells the story, right? I've never lied or jokingly said that. I have always been 100 when it comes to that. The chart tells the story. And I think that the chart is continuing to tell us that story. You haven't broken above any important technical resistance. Today's candle, while it's up 7 to 8%, didn't accomplish a single fucking thing. You didn't break that lower low trend line. You didn't break the important resistance at 262, 263. You didn't break above that death cross. You didn't gap up 20%. Like, for all of the positive things that have happened with, I'll say, the share price going up, it hasn't accomplished anything. And then like somebody said in the comments there, like who said that? Like Vince, or excuse me, like TSF said in the comments there, right? Tesla stock has never been grounded in reality. Like, let's be perfectly honest. There's no such thing as reality behind that movement. And there's no reality behind this movement. Don't get me wrong, Tesla is a fantastic company, but it wasn't worth this much back then, and it sure as fuck wasn't worth this much back then either. But that doesn't matter because Tesla's share price is not grounded in reality. Tesla's share price is grounded upon the fact of short sellers who have been ass blasted on this thing for years, and also long traders, right? Retail investors similar to us on GME who own this stock and refuse to sell it. Right? So that's what I would say about Tesla and about like its movement that you guys are seeing. The chart is what tells the story. Forget the outside noise. Forget the political discussion points. Forget all of that stuff. What matters most is the chart. The chart tells us the story. And even with this gap up, you have to look at the chart and ask yourselves objectively, has it accomplished anything with that gap? Have you broken this range? No. Have you made a lower high so far? Yes. Are you still below the death cross? Yes. Are you still below technical resistance? Yes. All those things come together in a culmination to kind of point to things and say, is this as bullish as we think it is? Right? Is this as bullish as we think it is? Or is this just a 1 or a 2 day temporary move within an otherwise very clear downtrending range? So that's ultimately where I would end off that Tesla discussion. All right. And then Aiden wanted me to look at VSCO. And then once we're done VSCO, all right, we are going to look at Crapto really quickly. And then everybody's favorite, GME. All right. And you guys know I'm not leaving it on last on purpose because I want to leave you on red, right? Just I want to get through some of this stuff because we're going to end today after GME with the fair value gap discussion, and that'll be the stream today. So I want to just get through most of this stuff so that you guys are kind of, set up and prepared for what's kind of going on in the markets right now. All right. So VSCO. Looks like VSCO made a nearly perfect double bottom off of these lows here. Great bullish divergence. Not between these lows anymore, because this is a higher low. But between these two lows was a really nice one. And you could make the argument that that's a big-ass failure swing that you're currently bouncing off of the confirmation line for. You're still below the center line, so that's obviously somewhat concerning. You've got this trend line here. I mean, you could try and make the argument that maybe there's like a diamond. Maybe. This, I don't know where you draw that one. I mean, this one's easier to make a bit of a decision on. So you could maybe try and make that argument. It hasn't really accomplished anything with this bounce so far. Is it even above the 236? Yeah, it's got to be close. It's right at that 236. So there's the level you need to break right there. 1840. That's the level you need to break on VSCO. And that's about as simple and as clean as it can get right there, baby. Alrighty. So that's what I'd look at for that one. And then, whoa. Devin Toops with the $100 Bomberino. He says, Jackie, yesterday I saw the 4 hour about to have a clean MACD cross at 11 Central Time. It caused a $3 move on the SPY. Today, the 4 hour is right at the RSI bull zone. Is that related to the 4 hour? The bull zone. He said what? Today, the 4 hour is right at the RSI. Oh, you mean like at the center line there, going into like the bullish half? I would maybe look at the daily. Maybe that would be. I probably wouldn't put too much into it, Devin, with regards to the 1 minute butterfly. I mean, this 1 minute butterfly could just lead to a very small retracement back to the upside. I mean, we're getting a little bit of that retracement right now, but I don't know how much that would lead to a potential breakout for, say, the 4 hour or the daily. This would be, I guess if you were thinking that this was a local bottom on like the 4 hour or the daily, then this would maybe be giving you a signal for a good potential buy zone. But outside of that, I don't necessarily know like how much significance this very small structure would have in terms of its potential for a more macro breakout, if that kind of makes sense. Alrighty. Thank you very much, Devin. If I didn't answer your question, feel free to just comment again and let me know and just give me a little bit more in depth. And then the last one, so we can run over to crypto, is XCN. So XCN got that breakout that I was kind of telling you guys about yesterday when we were looking at this thing. So yesterday when we were looking at this thing, it was just poking its head above this potential bull flag, and then you got a 34% move. So that was very legal, very cool. So XCN bounced off that golden pocket. Nice breakout of this bull flag. It looks great. And if crypto can somewhat continue to perform well, I would make the assumption that XCN might actually see that really big break. Again, the breakout that I'm talking about here, like the full profit target on that bull flag is taking you all the way to 6 cents. So, I mean, you guys can imagine from even just an entry back down here. I think we looked at this yesterday. Wasn't it like 190% or something? 230. So pretty interesting taking place on XCN. And then let's just quickly run over to crypto and Bitcoin and talk about this. So Bitcoin had that really nice, healthy move yesterday. Today, it has run into this golden pocket here. All right. And this is the very first test of a golden pocket. And you guys know that the very first test of a golden pocket, typically we find resistance and reject. So what I would kind of like to see now, I still have the indicator target open at 95.5. Right. So what I would ultimately like to see is, even if this comes back down, get this to start coming up, right? And have this kind of smooth off a little bit. If price can kind of consolidate like this and then have that golden cross take place and then we rip off of it, I mean, that would be the most ideal scenario. So for right now, 94 to 95 is healthy and heavy resistance on Bitcoin right now. The daily RSI has broken well above the center. You're right at the top of the bull zone. So if we want to see this move continue, we want that daily RSI to stay in the bull zone. If we drop down to the 4 hour, the 4 hour hit the overbought territory. So that's why we're seeing an overbought signal met with price action at a golden pocket. That's why we're seeing this little bit of a retracement. So ultimately, what I would like to see on this smaller time frame on the 4 hour is for the 4 hour to stay in this bull zone, right? And allow this to build some support, maybe even flags out, right? And then maybe you can kind of draw something like this, right? And there's your flag, and then this thing breaks out and boom, boom, city, right? That would be pretty legal, pretty cool. So that's mostly what I'm looking at for Bitcoin right now. It looks really, really strong and it looks really healthy. It's just we've got some really important technical resistance to get through. All right. And that technical resistance is at about 94 to 95K. And that's this golden pocket right here. Again, I have an indicator target right at the top of that golden pocket right here. So I want to see Bitcoin touch that before we push back down again. So that's what I'm looking at for Bitcoin and crypto. And so as far as the crypto things I'm paying attention to, always IMX. I love this thing. I really like 1 inch. 1 inch is a great asset to trade as well. The two that I'm like really going big on right now is Loopring. I really like Loopring. And then I also really, really like Link. I think Link is fucking awesome. So I'm balls deep on this thing and LRC right now. And then I also picked up a little bit more DOT. I picked up some more DOT because it's back at my little support box. So those are the ones that I'm kind of mostly paying attention to right now. And then as far as the, I'll say crypto miner stocks that we looked at or talked about yesterday, you've got Riot there, right? So Riot was up like double-digit percentages off of all of that bullish divergence that we talked about. I think that was yesterday or maybe the day before. We talked about GREE. So GREE having an unbelievable movement, 17% on the day, testing that daily 50-period moving average. Another one that we talked about was Wolf. So Wolf, really nice reaction to this harmonic. It's now run into this macro 236 at 294. So this is what we need to see broken on Wolf to see a continuation of this breakout move. All right. And I think that was mostly the ones that we took. I mean, you've also got Coinbase here, which Coinbase has run into its daily 50 and very first test of its death cross, which that's not very legal and not very cool. But if you guys were in the Discord, White Rabbit called that one out. So if you guys were in the Discord, White Rabbit was calling out the short on Coinbase there on the test of that daily 50 death cross. So that was a really nice call out from him. Really, really nice call out. And then obviously we've also got MSTR, which is at some pretty important resistance itself. So I'm really hoping that this thing just completely pukes and this thing comes right back down. Not way back down, but just back down. So that's what we've got going on across the market, folks. Okay, that's what we've got going on across the market. And then Addy with the $20 bomb says, first 1K day since the 2021 squeeze. Huge thanks to the lessons and confidence provided by the Discord. What a legend. What a legend, folks. So there you go. SPY has gotten into our green circled area, and now this butterfly is turning into a deep butterfly. So deep butterfly completion is right down here at 535.80. 535.80, folks. So watch for 535.80. And let's see if we can get the reaction off of this harmonic. That is a new low of the day on SPY, and you are giving back some of that gap up news from yesterday. Okay, so now I've bored everybody to death talking about all of the boomer stuff and all of the sort of fun but sort of boring stuff. So if you're ready for GME discussion, if you're ready for some GME discussion, throw me a GME in the chat box. Oh, what's that, chat? I can't hear you. Did you say GME? You said GME? Did you guys say GME is cool? I don't know. There's not really very many typing in there, so I'm not fully not fully convinced. All right. Sorry, folks. I had to go grab my coffee. I had to go heat it up. Okay. So, GME. All right. Let's get rid of some of this crap here. All right. Get rid of this just temporarily. All right. So still have that indicator target at 29.21. So still looking to get there. If I remember correctly, that was left on the 3 minute. So let me just double check and make sure. Yeah, that was left on the 3 minute right there. So that's where that indicator signal comes in. So that indicator signal is legit. So zooming back out onto the daily for GME. All right. Now, let's turn off the drawings here quickly, and we'll make this somewhat interactive for you guys so that we can all kind of build our own conclusions and ideas. All right. Jackie cries when his likes are below 100. I do. They're tiers of short sellers. So if you guys want me to shed tears of short sellers, don't like the video. But if you would prefer me not to cry, definitely like the video. So first question I have for you guys. Let's zoom in on today's daily candle. Now, let's also remember that there is still 4 hours left in the day. So this is subject to changing. All right. So if we're just analyzing today's daily candle as it stands right now, it's not a bearish engulfing. Okay. So if it's not a bearish engulfing, what could today's daily candle be called? What could this potentially be called, guys, on the daily time frame? What could that potential candlestick formation be called? Let's see if some of you guys know what this is called. Ooh, there you go. Poor life choices. Good. Sonder. Nice. Adrian. Good. Dugala. Good job. Pat Smith. Very nice. All right, so there's 1, 2, 3, 4, 5. Ooh, Kyle Schultz. There you go. The good one. Nice. Very good. Okay, guys, so check this out. This particular type of candlestick formation that you guys see right here, there's actually 2 different types of candlestick formations that this can be referred to as. All right, so first you have a bearish piercing. All right. This is known as a bearish piercing candlestick formation. All right, so what does that look like? What a bearish piercing candlestick formation is, okay, is when the next day's candle starts on a gap up, which is what we did today, all right, and then it comes back down. And if you measure this candle, all right, from the body close to the body open, all right, so if we measure this candle with this stick right here, okay, we'll drag this stick out here. And then we pull our little Fibonacci. All right. Where's our little Fibonacci? Fibonacci, arrivederci. All right, so we'll just pull that across. And then we know where the 50% line is, which is right there on the Fibonacci. So that is the 50% line of a bearish piercing candlestick formation. And we'll put that at the top right there. All right. And then once I put that at the top, then we draw a line on the bottom of that thing, and that line right there is going to mark off 50% of yesterday's candle. Okay, that's going to mark off 50% of yesterday's candle, all right? And what a bearish piercing candle is when the next day's candle gaps above yesterday's and then actually comes back down and closes underneath the 50% of yesterday's candle. So we know that 50% of yesterday's candle puts us at approximately 27.38. All right. So if GME were to close today on the daily candle below that 26.38, today's daily candle would said to be a bearish piercing candlestick formation, and this could potentially lead to a little bit of a reversal. Okay, so again, please recognize, guys, that there's 4 hours and 4 minutes for this to change. So there is still a metric shit ton of time before this candlestick on the daily closes. So this is very much subject to change. All right. The next one that it could be, all right, instead of a bearish piercing candlestick. Okay. By the way, SPY hit our full deep butterfly. We hit the full deep butterfly on SPY, folks. Look at that. Isn't that neat? So the full deep butterfly has been achieved on SPY. Let's pull this up. Pull that down. Mark this off quick for you guys. Boom, boom, boom. All right, there we go. So the next candlestick that this could be, all right, let's see if you guys have heard of this one. Dark cloud cover. Okay, so dark cloud cover is quite literally a bearish piercing candlestick. Okay, true story. This is identical in every single way to a bearish piercing candle. Okay, now I don't know why this is not loading up on the thing here. Give me a second. There we go. All right, so dark cloud cover is quite literally the exact same thing. right? Where you mark off the 50%, it opens above the prior daily candle, comes back down, and then closes below the 50% level. So when you hear bearish piercing, right, or dark cloud cover, they are quite literally the exact same pattern. They do the exact same thing. They have the exact same performance. It's right. So this right here, just understand that when you hear people say, oh, it's a dark cloud cover, right? That also just means bearish piercing, or vice versa. When you're hearing people say, oh, it's just a bearish piercing. Well, it's dark cloud cover. You can say the same thing about both candlestick formations, but just understand that these particular candlestick formations are good for bearish reversals. All right, it doesn't necessarily mean that we're just going to reverse this trending move that we have made so far. It just means that if this candle were to close today, we do have something bearish on the chart that we would need to be attentive of that could potentially lead to that, more macro reversal that we're kind of looking at with this potential candlestick formation. Okay, so now that we've gone through there, okay, Marubozu. Marubozu candles are full body. Marubozu are supposed to be no wicks. Those things are supposed to close at the high and open at the low, or open at the high and close at the low. But that's what those candlesticks are supposed to be. They're supposed to be full body. Like this one, you can make an argument that this one is, right? You can make the argument that that one is. All right, so those are just a couple of things that I'm noticing on the daily time frame, at least for right now. Okay, just a couple of things that I'm noticing on the daily time frame for right now. It's not the end of the world. It doesn't mean we're going to crash. It doesn't mean it's going to come all the way back down, right? It's just something that I'm happening to notice for right now. Okay, so don't get all, sad soy boy that this thing is going to come back because we're talking about dark cloud cover, right? We're fine. Okay, just wanted to make sure that we shared that. And then another little piece of information that people can take from this, okay, this is a really good thing that you should write down. When these candlestick formations take place at prior areas of support or resistance, the reliability of those patterns tends to increase dramatically. So with this potential dark cloud cover happening at a point of resistance that we have seen on GME's chart since we started breaking these highs, right? Look at all the resistance and support that was provided there. Look at the same resistance and support provided here. Look at the resistance provided here, right? Look at the support that was provided here before that gap down, right? So this red line that we have drawn right here at, let's just call it $28, that level at $28 is very, very, very important. And the fact that you have a bearish candlestick formation taking place at that resistance adds a high level of reliability to it. Now, again, we have to remember that this candlestick formation is not confirmed because there's still fucking 4 hours left in the day. So we have no idea if this is how today's daily is going to close. Okay, so we can't be worried about something that hasn't formed on the chart yet. It's just something that we're paying attention to. Okay, so everybody kind of with me on this discussion so far. Everybody kind of, I'm just trying to get all of like the gay bear stuff out of the way for right now. Okay, so we can kind of move on to some of the more fun stuff. So is everybody kind of with me in that regard so far? Just give me a GG or a TG in the chat box if you're with me so far. Bip, bip. All right. Good. Okay. So now let's talk about some of the obviously positive things that we've had going on. Since the 2080 lows, 36%. Very legal. Very cool. And during this run so far, folks, we have broken above some very, 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 very important technical areas, right? We have broken above that important technical zone at the point of control at 26, right? We have broken above that daily death cross that we were really worried about when we had that big nasty candle come back down here towards 2080, right? We've now broken above that death cross. Now, we haven't necessarily defeated it yet because we don't have it flipping over into a golden cross quite yet, right? But having said that, it's still price action above it, and the point of control is very, 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 very positive. All right. Opening up the daily RSI, you have broken above the center. You have broken above the EMA. You are in the bullish half of the daily RSI. If we open up the Bollinger Bands, you will see on the Bollinger Bands, we have broken above the center line. And not only have we broken above the center line, but now the center line of your daily Bollinger Bands are crossing through both your daily 50 and daily 200 period moving average. That's bullish, right? Because the last time that we had it cross both of them was quite literally back here when GME went stupid mode, right? Because you crossed here and then crossed here. And then that was quite literally the cat squeeze, right? And then the last time that you had it happen prior to that where it crossed both was this move back here when Ryan Cohen and the team bought after earnings in June of 2023. And then prior to that, you have to go a long way back to see it cross both moving averages. The last time that it did that prior to that was in that summer run of 2022. So you guys can see, like, there are a ton of technically important things that are happening on GME's chart, right? And a lot of it is building support lower rather than building resistance higher. Right. And that's the important thing is rather than establishing new resistance ranges that we've got to be worried about, we are building higher support. Right. And it's not just like one or two things of support. You have the point of control. Why is the point of control all the way up there? Go back. Thank you. You have the point of control resting at arguably the three most important moving averages that we use on this particular chart. Right. And then you have price above all of the bullish halves of all of these technical indicators. You're in the bullish half of the RSI, right? If we open up the weekly, you're in the bullish half of the weekly RSI. If we open up the Bollinger Bands, you're right at the bullish half of the weekly Bollinger Bands. If we open up the daily Bollinger Bands, you're in the bullish half of the daily Bollinger Bands. So many technical things that we currently find ourselves trending above rather than below, which gives us reason to be bullish, right? Now, like everything else, we're obviously very cautious and very cognizant of the fact that the market is kind of wishy-washy right now. So we're cautiously optimistic, right? But part of the reason that we have the optimism that we do stems from the fact that the market has been total shit for the entirety of 2025. And while GME has retraced for 2025, the truth of the matter is GME has performed better than a large majority of the stocks within the stock market, right? That's not conjecture. That's just straight out truth, because we've witnessed it every single day that we have been trading this asset. Market is deep red, GME like 1% red. GME big green, GME kind of just chilling green. Like, GME has been such a stable asset during this period of time that it has caught a lot of different people's attentions, right? So all of these technical things, it's not just you and I and everybody else in the chat box looking at these things. Like, there are other traders, other hedge funds, other institutions that look at things like this, and they look at these charts the same way that we do. And when they see the same things that we do, they look at this from the same perspective and they say, wow, that kind of looks like there's some good value or some good opportunity there, right? So don't sleep on the fact that this chart looks really good. Right. And I know the first thing that I saw from people this morning when I woke up, when I saw GME's chart is SPY's up 3 or 2 or whatever percent, and GME's only up like 1%, and now it's red 2.5%. What the fuck, Jackie? Why is it so fucked? Why are we so fucked? Well, most of the things that got bid up this morning have come right back. Like almost all of the things. That also includes SPY, right? Like SPY hasn't been immune from this either. It's trading right near lows of the day again. And so most of the things that have popped off have ultimately come back. But again, like the point I am trying to make about the significance of all those bullish technicals that we have talked about is that yes, GME is coming back, but has it done anything of significance? This goes back to the same Tesla conversation we just had. Did Tesla's big gap up today, or did Tesla's 8% move today, did it accomplish anything of significance? No. In fact, it just made a lower high so far. GME is kind of like in the same boat, but in the opposite regard. Has GME broken any technical support on any of this movement down? No. Have we broken this run or broken any of this trending move that we've seen so far? No. So as far as you should be concerned, right? Even if GME has this, 2.5% down day, look at what has been accomplished over the last few weeks when the market has been total fucking shit. The longer the GME trends above this range right here, that 24, 25, 26 range, the longer that it trends above that range, the more bullish that people should ultimately be becoming on this thing, because it looks amazing. And I will continue to say it, right? It really does look excellent. And then if we open up the whole suite, one of my favorite indicators for catching potential reversals, look at the whole suite now crossing that golden cross. Big green ribbon shooting straight up, prices above it. Right now, we are below the weekly and somewhat rejecting it, but this is just our first real week of testing that. So give it some more time here, right? I know we're still kind of early in this week, like we're about halfway through this week, so I know we're still kind of early there, but like be patient, guys. Just trust me on this and just be patient. Because in order for this thing to see that big breakout that we want towards $30, maybe even $34, we need this thing to not suck. And one little gap up caused by some fucking silly tariff news is not enough. It's not enough to pull us out of what we've got going on here. Because again, this ultimately all boils down to the fact that we have uncertainty. And that uncertainty leads to uncertainty not just on the S&P 500, but on assets across the entire fucking stock market. GME, Unity, Tesla, Microsoft, Chewy, APLD, doesn't matter. It's just uncertainty, 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 uncertainty. But the longer that GME treads water above technical support, while all of that uncertainty is taking place, the expectation is that this thing can outperform the market this year for 2025. And so, again, I just continue to tell you guys, it's a slow game right now, right? It's a slow game right now. And with this slow game, we have to outsmart the market. And outsmarting the market means to take profit at highs and buy at the lows. And we have done an exceptional job of that over the last 2 years. And so even if we do have, let's just say, for example, even if we do have, a bearish daily candle that gets placed here and maybe GME does have a retracement, I won't be worried until we break these moving averages and that point of control. And even then, I still won't be worried because of all of the support that has been provided at this exact range right here. This exact range, and then look at those drawings. Hey, fucking brilliant. Yeah. Stocks up, people happy, things good. Yep. So, does what I am trying to say make sense so far, folks? Does that mostly make sense? And if you have questions, please ask them right now, because I want to answer all of your guys' questions if you have them. I want to make sure that people aren't like left in the dark. And if you don't understand something, say it now. There's no such thing as stupid questions or stupid things like that, right? Just if you have questions, fire away, my boy. or girl. It don't matter. All right. So I'm going to run to the bathroom, and then we are going to do this fair value gap discussion. All right. So I'm going to run to the bathroom here. And then, so for those of you not in the Discord, this is going to give you a preview of the education that we provide in the Discord. Normally we would make this a private lesson, but because I know there's so many of you guys in the chat box that have asked about this, I'm going to do kind of a public fair value gap on video on this for some educational content. It's not going to be the longest video because there's not that much to talk about with fair value gaps, but it should be a fun one. So if you guys are into that kind of thing, give me a little GG or TG into the chat box, folks. Give me a little GG or TG in the chat box, and we will get on with this fair value lesson. Just heating up my coffee, folks. Give me 30 seconds. Give me 30 seconds. Bow down 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 bow 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 down 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 bow 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 boom bow. All right. All right. Okay, folks, let's do it. Let's do it. Trump crypto going crazy. Let's take a quick peek before we start on this. Yeah, 28.5%. Look at that thing booming off of those lows. Oh, goodness. What else do we have going on here? What else is moving up on crypto? Anything big? Nope, just that. And then XCN. XCN has given back a lot so far, but SPY just clinging to those lows of the day. Better hope that holds. That might be trouble. All right, so let's talk about fair value gaps. Let's talk about fair value gaps. Okay. So, what is a fair value gap? All right, what is a fair value gap? Now, in the simplest of terms, okay, a fair value gap is essentially just a point of liquidity within a chart where price action has just exploded through it with very little buying or selling taking place during that surge. All right. So that is what it is in the most simplest terms. Okay. Now I have written a little bit of a definition here for you on the bottom. A fair value gap is usually a strong surge in price action that, quote, skips over liquidity. Fair value gaps are fairly common with large swing moves that occur. And during these strong moves, price action doesn't really spend time testing these prices or areas that it blows through. This is why they leave, quote, gaps that don't look like gaps on the chart. All right, so fair value gaps. Now, listen, you could draw these fucking things everywhere, right? Because the truth of the matter is, now I'm on the daily time frame for Unity here. All right. Now, the truth of the matter is that there are several strong surges in prices, both bullishly and bearishly, all over the fucking charts. And this is not just for Unity. This goes for Tesla or GameStop or SPY or Microsoft or Nike or LPSN or any of these assets, right? So when you look at fair value gaps, typically like what my focus is on the big candles after a like consolidative phase of price action. All right. So what do I mean by that? All right. And I'll just draw it here as an example for you guys. So what I mean by that is if I see price action going like this, and then it has a big, strong surge down, right? There is said to be a fair value gap of liquidity led through that entire range. But the truth of the matter is that asset was already trending down and then saw a big surge down in price. So maybe it's just a piece of shit, right? Whereas the fair value gaps that I like to mostly pay attention to, and again, this can be both bullish and bearish, I'll show you both examples, it's where price action has kind of consolidated, right? And then it makes that big move up, and then it leaves all of this zone here as its fair value gap. And because price was consolidating perhaps within a trending range, right? That's what gives you the reason to think that it can come back and fill those fair value gaps, right? And the same thing on the bearish side where you see the consolidation, right? And then it makes that sharp move down, leaving this big fair value gap here, right? And then looking for the swing to come back and fill it. All right, so when I'm looking at these fair value gaps, just realize that I am looking for the fair value gaps that mostly have some level of consolidative price action, right? That gives us some sort of a range or ability to identify where that liquidity is taking place on that move. All right. So let's get into the nitty gritty of what is a fair value gap, right? How do you identify fair value gaps? So we know that it's a strong surge in price action that essentially skips over liquidity. So what does that mean? Well, you guys can see on Unity that I have focused on these ranges or this candle here of price action on Unity. And I've marked off what the fair value gap is. All right. That's this yellow box right here. That's what FVG stands for, fair value gap. All right. So this right here, you guys can see that there was a nice trending range of price action, right? Where it makes this healthy move up, right? And then comes back down and then consolidates within this range. All right. Now, because it consolidated within this range, that immediately kind of catches my attention. Beyond the fact of a fair value gap, maybe I'm looking for divergences or maybe I'm looking for a potential breakout off of the daily 50 turning bullish here, right? But regardless of whatever it happens to be that gives me the idea or the initial thesis of a trading plan or execution down here, once this big candle right here happens, okay? So once you guys see this big candle take place right here, okay? A couple of things happen. First of all, this candle breaks our range, right? So we were kind of buried within like, say, this kind of range right here. And that candle broke us out of this range that we were kind of trapped in. All right. So not only have you now broken the range, which kind of further signals a breakout here, but this candle, right, leaves a massive body, right? It has a massive body. And if we look over to the left, all right, now this is the nitty gritty of identifying these fair value gaps. All right, these are the nitty gritties of identifying these fair value gaps. When we look over to the left-hand side, we can see that there was some candle action here, some candle action here, some candle action here. Okay, and this is just within the most recent price action that happened prior to this big move up here. Okay, so when I look at that, what you have to do when you are trying to identify fair value gaps is when you get these big candles, right, and there's all this space within that candle, you look over to the left and you look behind the candle and you identify areas where liquidity has been grabbed before that candle took off. So we can see that liquidity was grabbed on that candle and on that candle, right, before this big breakout here. So the fair value gap is not said to be started at the bottom of this body on that candle for that big, strong surge in price action that skips over liquidity, right? Now, it did skip over this liquidity, but there was liquidity that was grabbed within this range here, right? Because this candle and this candle within this range of price action is within that bar, right? So the fair value gap doesn't actually start at the bottom of the body of this candle. That fair value gap actually starts at the top of that liquidity. And that liquidity was grabbed at the top of this purple candle right here. So we actually moved the fair value gap to there. And the reason that it is said to be a fair value gap is because liquidity has been soaked up within this range. And so oftentimes when price just blows through points of that's the wrong thing to say. When price just blows through liquidity zones, right, with very little buying or selling, oftentimes you look for price action to come back to that range because oftentimes both buyers or sellers, again, it depends on the scenario, both buyers and sellers want to fill those voids of liquidity before ultimately sending the stock on its next move, whether that is into another higher high or whether that's into a lower low, right? Again, it depends on the scenario. All right. But this right here, these fair value gaps, so this is the second part of what is a fair value gap. Envision the VRVP indicator and its nodes. When you have that strong surge in price, the nodes that are left where those fair value gaps are is almost none. Why? Because price didn't spend time bidding there. It just sort of ripped/dumped. Oftentimes, price likes to revisit these areas to fill the liquidity gaps/holes on the chart and test/confirm those areas. Again, you got to put it into the context of what's happening. So if it's bearish, you would be looking as the confirmation of that bearish dumping move, right? Or if you're bullish, maybe it is a bullish back test of a higher low within a trend, kind of like what we saw with Unity here, right? Low, higher low, higher low off of that fair value completion, and off you went. All right, so to continue on with our discussion here on this fair value gap on Unity, right? So now that we've drawn that fair value gap and price has that big breakout move, all right, we have what is technically considered a gap on the chart. For those of you that follow along with how I trade SPY or what I teach people with regards to SPY, right? And this goes well beyond SPY, but SPY is just the easiest one to kind of show with you guys right now. When we talk about the SPY and we talk about gaps, we talk about how we don't look to fill those holes until we are trending in that direction. So just like any gap, when we made this big move and it left this fair value gap and then price gaps up here and starts to run, we are not looking to fill this fair value gap until we trend in that direction or we have reason for the stock to come back. So in Unity's instance, right, we weren't initially immediately aiming for the completion of that fair value gap. What we wanted was reasons for the stock to come back and fill that fair value zone, right? And in this instance, what we actually saw here with Unity was 3 consecutive lower highs, okay? And with those 3 consecutive lower highs, if you look on the RSI, bull zone, reject bull zone, reject it again off of those divergent touches, and then push immediately back down, all right? So it's just like any other gap. The only difference about a fair value gap is that fair value gaps don't just immediately show themselves on the chart, right? It's not like, let's say, for example, I'm trying to think of something that gapped up or gapped down recently. Let's say, for example, AREB, right? So AREB, right? When you made a gap down on this stock, you guys can see the hole that has been left. Visually, it is very easy to identify the hole that was left on this chart. Okay? Now, if we were trying to identify a fair value gap, right? If we were trying to identify a fair value gap on this candle right here, and we looked at that hole and we already recognized, okay, we see that gap. Where is a fair value gap? Well, if we look at this candle right here, right? If we look over to the left, you guys can see that the top of this candle hit up here, right? And that's just before this takeoff. So the fair value gap on this thing would have started from here up to the top of that candle, right? And then you can see on the very next day, it ended up gapping down back inside of it. So you filled a large amount of that fair value gap, but it's still there. And then look at how perfectly you filled it. If I drag this across, look at that. Look at how perfectly you filled the fair value gap on AREB left from this big move here. And again, this is not something that you are able to just immediately see the same way that you're able to see this hole on the chart, right? This is not something that you're immediately able to see. This is something that you actually have to kind of go through and look at day after day, you know, if you're trying to spot these potential little fair value holes and gaps to take advantage of, right? So going back to Unity, all right, now check this out. So we've gone through this example of this fair value gap. Just before I move on, I want to just ask the chat box here really, really quickly. Everybody with me so far, does anybody have any questions with regards to the fair value gaps? Does anybody have any questions with regards to that? So essentially, fair value gaps are regions where buyers and sellers can be identified at price levels they see fair value. Listen, I don't know why they call it, I'll say, necessarily a fair value gap. I just know that the gap is left there because there was essentially no buyers and no sellers that were trading it through that range. And oftentimes in the markets, whether it's algorithms or whether it's just buyers and sellers and the nature of how the market functions, they don't like to leave areas of untested liquidity. So oftentimes with these areas of untested liquidity, price wants to go back there so that either buyers can then bid that thing up after they know that they've retested those areas as confirmation, or whether the algorithms need them to come back, whether that's, you know, for liquidity purposes or whatever. I just know that these are essentially just gaps on the chart that are just identified in a different way. Is there criteria when considering or determining a strong surge in price? You're just looking for really big candles. You know, that like here. So like, for example, here on Unity, right? We marked off this fair value gap. Well, let's mark off the next one that happened in this trending range, which was right here, right? This was a big, strong surge in price action. Now, sure, you could mark off the fair value gap, right? You could mark off the fair value gap as all of this, right? But why? You want to spot the true gap, right? And the true gap is just candle to candle on the fair value, right? So we know that the fair value gap on Unity after this next surge in price was from this low, right? Because of that candle here, we're not going all the way to the bottom. So from that low here to the high of that body candle, right? And again, you guys will see if I drag this thing across, look at how this thing gets filled. Right? And again, you wait for price to trend in that direction. It's no different than any other gap rule or gap trade that we use, guys. You wait for price to trend in that direction, right? So if you're unfamiliar, all right, if you're unfamiliar with this, there are 3 different types of gaps, right? 3 different types of gaps. You have your fair value gap, which we are talking about right now, right? You have your regular gaps, which are just holes on the chart. And then you have your technical gaps, right? And your technical gaps are the ones that, people probably gloss over the most. But all a technical gap is, okay? So let's talk about the difference here really quickly between all 3 of them. You guys already know the difference of a fair value gap. There's no actual hole on the chart. It is a hole of liquidity that we are aiming for. So you guys already know what fair value is. A regular gap, all right, is where the share price makes a gap up or a gap down. And then when that hole on the chart is filled is when the wicks connect to one another. Okay, so when we made this gap up right here on Unity, all right, going from this low here to this high here, right? There was a wick on this candle here. Okay, so there was a wick on that candle here. And then there was a wick on this candle here. So the gap on like the regular gap on Unity was said to be right here. Okay. And then you guys can see that it ultimately ended up getting filled on this candle right here. And then we filled that gap. All right. The difference between a regular gap and a technical gap is the technical gap is not focused on the wicks. It is focused on the opens and closes, right? So if you want to get into the technical weeds of this same gap up that we just looked at, the closing price for Unity on this day was $21.47. The opening price the next day was $24.68. So there is a hole between $21.47, the body candle close, and $24.68, the body candle open of the next day. So rather than having to touch this wick here and this wick here to fill this gap, right, the regular gap, what you're looking for now is to actually fill the true gap, which is the bottom of the close of the day prior to the opening of the next day. That is the technical gap. Okay, because even though you have filled the wicks on regular gaps, price action did not close on the wick. It closed on the body. So there is still said to be a gap from this day's price action to the next, right? Even if you hit that wick, there's still all this range right here, and it might not look like much, but it can be the difference between spotting a perfectly timed reversal and a really good reversal. All right. So everybody with me on the gap fill side of things so far? Then we've got Daniel Kiernan with the 5 gifted memberships. Legend. Absolute legend. SPY, good bullish divergence probably on larger time frames. Not really, actually. Right back to that 536.60. Again, we've talked about this level so many fucking times. This is arguably the single most important level on the S&P 500 right now. So everybody with me so far on the differences in all those gaps and all that kind of stuff so far? You're saying Trump coin is gone. Let's take a peek. 57% now. That's so epic, dude. I love that shit. Grifted up. Manipulation. Manipulation. For free is crazy. I pay for my education. Thanks, Lencho, with the $20 bomb. Absolute legend. Bored at Work and Stuff says, question, which of the 3 gap types is the most reliable to count on being fill? The regular gap. Because it just purely focuses on the wicks. So you don't even have to go like full completion to full completion. So I would say that regular gaps are probably the most reliable, but all 3 of them have a pretty decently high statistical probability of success. Great tips. Thanks, Wesley. Appreciate that. All right. So everybody's with me so far, it sounds like. All right, good. 800 people still currently tuned in. So let's show you guys a couple of different fair value gaps. So I've got one on Tesla here. All right, this was from back in August of last year. All right, so check this out, okay? You have price action consolidating after this big drop, right? You've got price action kind of consolidating within this little range right here. All right. And then on the 3 candles right here, prior to this big drop down, right, we get this move, and then this move. And then you catch this big surge down in price action, followed by a secondary surge in price action that finally breaks this range on Tesla. All right. So with the fair value gap in this instance on Tesla, again, I'm looking at the prior candle and I'm seeing that there was some liquidity grabbed within the range of this candle. So instead of putting it right at the body open, I put it at the wick low of the day prior that went into that candle. And that is my fair value gap. All right. And then you guys can see, right, it finds some support here, starts to consolidate, makes some bullish divergence, and then you see it push off and go to trend back towards that gap fill, and then look at it fill that gap, right? It almost filled it perfectly. All right. So all you're looking for is a big surge in price action. So we can look at this one here too, right? So here you can see a bunch of consolidation, right? Then a big surge in price action straight down after a nice, good little day here. So instead of having our fair value gap be this entire candle, right, we need to look at the day prior and say that this candle went all the way down into here of this candle. So the fair value gap was actually here. And then you guys can see the next day it opened up there, left a little doji, right? So we can say that that fair value portion of the gap was filled. And then the very next day it actually comes back and fills it. So all fair value gaps are, right? All they are just, they are not already identified gaps on the chart. It's not something that you're just going to open your chart and visually see, oh, there's a hole there and there's a hole there and there's a hole there and a hole there and a hole there and hole and another hole, right? Like fair value gaps are not something that you're just going to open up your chart and just immediately see. Okay. You have to kind of do a little bit of work to see those things play out. So for example, we had one on SPY on the daily time frame, right? So check this out. Let me open up the replay. Actually, let me get rid of this. Let me get rid of all of this crap here too. Just temporarily, just for a minute here. So if we do that, and then I turn on the replay thing there quickly. Okay, perfect. So remember that Wednesday where we had that big squeezy Wednesday, right? Where everything went fucking silly, right? So when we look on SPY here on the daily time frame, again, you see a monstrous, right? A monstrous move. And this is the kind of move that we're talking about when we reference strong surges in price action, right? This is a strong surge in price action. So now how do we determine what a fair value gap looks like here? Well, again, we look over to our left and we look at the candles prior and we say, well, the candles prior look like they got up to about here on SPY, at about 525. So our fair value gap on SPY after that day, right, was left from about 525 to the high of that close, right? So that's our fair value gap. Now, if we play it a couple of days forward here, okay, you guys can see literally, right, literally the very next day, that entire fair value gap was filled. Right? Because that yellow box was our fair value gap. And the next day you actually gap down and filled the entirety of that box, right? The bottom of the box is right here. And there's the candle from the next prior day. So we have actually filled all of the portion of this thing to the downside. Right? Now, what's interesting about this scenario is that due to this gap down in price action, this is now no longer a fair value gap. This yellow box that I've drawn right here, this is no longer a fair value gap. Isn't this a technical gap now? Right? Isn't this a technical gap? Because price closed here and then opened here. Right? So isn't this a technical gap? Right? Instead of a fair value gap that we're searching for, isn't this just a technical gap now? And then if we play price action through a little bit here, Okay, so you guys can see at least so far, a large majority of that gap has been filled so far, but that gap is still open, right? And we'll just continue to play this through so far. So you guys can see this morning we filled a little bit more of it, but there's still a technical gap there. From the close of Wednesday to the open of Thursday, there is still that whole remaining on price action. Right? So this is how you can kind of use some of these fair value gap, I'll say, ideas or plans and apply them to other types of gaps and gap fills on the chart, right? Because we wouldn't have known about that gap if we hadn't drawn that fair value one and said, well, how does that yellow box get filled if we started on a gap down? Oh, right. It's not fair value. It's a technical gap because we closed here and opened here. So that means that all of this space is a gap. And then we filled it and then filled it some more and then filled it a little bit more today, but it's still there. So that is an area that we are aiming for, and it's also a spot that we have spoken about many, many, many times before, especially if we are continuing to be bearish on this downtrending move. That's the level that cannot be broken, right? We don't want to see that broken to start trending into a higher high. So that's why these gaps and these areas are so important, not only to mark off, but it gives you an ability to build a plan and a thesis off of. Right? And so if you guys are curious about some of this information, all right, approximately 85% of all gaps are filled within the first 72 hours. Okay, approximately 85% of all gaps are filled within the first 72 hours. If those gaps are not filled within the first 72 hours, oftentimes price will trend away from it for a little bit of time. All right. So when you see these gaps created on these macro time frames, 85% of the time they will fill within those first 72 hours. If they don't, price will often trend away from them. This doesn't just go for technical and regular gaps. This also applies to fair value gaps. All right. So cool, fun little statistic that you guys can kind of use to apply to some of these gap fill charts and whatnot. Good job, Heathius. Good job, man. All right. So what do you guys think? All right. Okay. All right, folks. Well, I think that is pretty close to the end of that fair value gap question or lesson, excuse me. All right, I think that's I think that's close to the end of the conversation that I wanted to have on that fair value and gap stuff. So hopefully that helps kind of put some things into perspective for you guys and kind of gives you a little bit of a hand with regards to those gaps and all of that kind of stuff. What's Bitcoin doing? Oh, Bitcoin did flip green again. Good. XCN. Okay, good. All right. Is there a way to predict just before again? No, not really. I mean, other than divergences and stuff, but there's no way of knowing 100%. No real way of knowing. All right. Well, yeah, I think that's mostly what I wanted to kind of get through today, folks. I don't think I have too much more that I really want to add. No. Since AREB hit past the 236, there's an 80% chance it goes to price target something. I assume this is where you're drawing it. Well, it broke. I see it broke this 236 right here. So it looks like you have an 80% chance of going to 460, which is where I see the 382 Fibonacci is. If you're pulling it from, that can't be where you're pulling it from. It's got to be that. Yeah, I pulled the Fibonacci from the highest high of that move to the lowest low here. And my 382 is at 460. So you do right now, as it stands, you have an 80% chance of tagging that. And then I do also have an indicator target at $6. So there is a good chance of getting there, especially if this thing continues to remain relatively strong. Looks pretty decent. Okay, yeah, that's what I thought. No problem. If it reverses a gap fill, so same chart but exactly upside down, is it also just a gap fill? Yeah, no, 100. It's if you're just talking about the opposite of Velo, yeah, of course, right. The opposite would just be a gap on the bottom side, right? It wouldn't be a fair value, just be a technical gap. Okay, I think we got through most of the super chats and stuff. Oh, I did see Daniel Kiernan. I did get him. Okay. Yeah, it would be a technical gap. Yep, that's correct. All righty. So again, for SPY today, guys, that 536.50, it doesn't get any more important on SPY than 536.50. That is the single most important level to continue to pay attention to. All right, got some more tax stuff to get done and deal with, so I might have to just call him and talk to him and see what he says, because I hate fucking emailing. It's basically there now. Do we have a super big inverted head and shoulders on Rocket Lab? It doesn't have a ton of symmetry to it, but I definitely see exactly what you're saying, right? Got your head there, shoulder here, kind of like this with your neckline. And that would take you right back to those prior highs at $30. So it could be. And I mean, Rocket Lab has actually been one of the better performing stocks in the market. So definitely something worth paying attention to for that inverted head and shoulders. I don't know how much faith I would put into it. I do like the structure of the RSI. The RSI does look kind of nice. I can't believe it's still trading on that upper trend line. No fucking way. That's crazy. Wow. Well, we could probably delete that lower one. Ooh, SPY taking a little bit of a dumpy. GME, Bitcoin still strong. Where's that Trump coin off to? 50% still. So yeah, Rocket Lab could have a big inverted head and shoulders. I did look at Bitcoin today. Yes, briefly. It's above both of the the death crosses moving averages. It's above both of them. It's just running into that macro golden pocket at 94.5 to 95.5. So that's the next huge level that you need to watch on Bitcoin is this range right here. This is massively important for Bitcoin. And that goes like Bitcoin strength obviously applies to all the other shitcoins that we like to trade as well. Link, LRC, DOT, SHIB, XCN, all that stuff. So Bitcoin's at a pretty important range right there at 94.5 to 95.5. Big macro golden pocket that it's got to get through there on Bitcoin. Root, head and shoulders, BF, extended VTOP, all invalidated with that breakout. I wouldn't really say so. No, I wouldn't say so yet. No, because I mean it hasn't. Technically speaking, I mean there's not really a ton of liquidity in this range, so it's very difficult to say. But technically speaking, like you haven't broken the top side of this yet. Right. So if this were a head and shoulders, it's still very much intact. Right. As far as an extended V-top, I mean, the top side of the extended V-top may not look as clean anymore, but I still wouldn't necessarily say that it's not. I would just probably say at this point in time, like, Root is just not a company that I would ever want to short, you know? This thing literally goes up only, and it has held its trend extremely well. Even if it does have a retracement, it still wouldn't be something that I personally would be wanting to try and short. But I wouldn't say it's invalidated any of those structures. I just say that it's made them look a lot more shittier in terms of their potential. Not to mention your MACD crossed below center and now has gone through center, and your daily RSI has broken through center and the EMA. So for right now, it just looks strong and probably not something that you want to argue or fight against. Not that you were, just not something that you probably want to do, at least for right now, until you get some sort of conclusion about either the Head and Shoulders, the V-top, or breaking this prior high at 180. So that's what I would say about Root. All right, the chat box is so quiet today. Everybody's so quiet. Remember how you kicked Monks out of the Discord for calling out Milch as a grifter, and now Milch is gone? Interesting. Why are you using your wife's account? Why are you using your wife's account to say that? That's weird. GME not moving. SPY again. 536.50 is the macro 236. All right, that macro 236 taken from the bear market lows. All right, so that was taken from the bear market lows to the all-time highs. That's this 236 Fibonacci at 536.60, where we find ourselves having some good resistance on right now. So that Fibonacci level is going to be wickedly, wickedly important going forward. Very, 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 very important level that the SPY finds itself at right now. Also below that 4-hour 50 period moving average again as well. So we are finding good consolidation there. You could also make the argument that this is a big inverted Head and Shoulders right there, you know, off of the back of that harmonic completion. And then there's your trend line. And if that were to break out, probably aligns with a golden pocket profit target number 2 off of that harmonic. It does. Look at that. Fuck, that's good work. That's fun. Back to work, unfortunately. Everybody's working. We're working for the weekend. Moment of silence for Jimmy. Why? What's wrong with Jimmy? Is down 2%. And on the week is currently up 1.5. So what's wrong with Jimmy? What happened? That TA is beautiful. I love it when a plan comes together, don't you? Got an hour to hang with Jackie and the Tits Gang. Fuck yeah. Still off today and tomorrow. Yeah. Don't need those. SPY. What else? What's going on here? Corsair still doing pretty well. DJT resting. I think that's near highs of the day. Oh, yeah. Well, I should have known that the chat's quiet because I'm not endlessly talking about GME. Tomorrow's my birthday. Hoping for an excited day. Wow. Happy early birthday, man. Happy early birthday. Still off tomorrow. I hit the lotto spread on SPY today. It feels good, man. Good job. You're driving GME 30-day IV at 66. $65.8 right now. Crazy that the IV is just dying. Contracts are becoming cheap. How cheap? Very cheap. Cheap suit. Because you keep blocking me for letting people know you took my money for calling out grifters. And now, I didn't get to read it. God damn it.
One rule, don't be a dick. You broke it.
And now you can block me again instead of having a conversation. Well, I mean, you're not really all that interested in having a conversation, are you? You're more interested in just trying to pretend like you're right. But that's not why you got booted. You got booted because you were not only sending invites to other people's Discords in my Discord, but then in those other people's Discords, you were endlessly talking shit about me and then trying to like cause problems for my Discord. So I booted out all of you retards, and now we actually have a really smooth running Discord. So what did you say? It was interesting, I think you said, about, right? So I think I'll use the exact same words. Very interesting, isn't it? That we boot out all the retards and suddenly the Discord becomes significantly improved. Spy making that breakout from that inverted head and shoulders, folks. Spy breaking out from that inverted head and shoulders. Oh no, the Discord, no hell has broken loose whatsoever in the Discord. In fact, the Discord has been running better than it ever has been. We just had to deal with some people that, were at one point trusted traders and then created their own Discords. And then after creating their own Discords, they tried to message my members privately behind my back while also being in my Discord, trying to get them to join their community, while also then telling them how stupid and shitty I am and how much money I was costing them. And so we ended up finding out that they were doing that. And then we removed probably a good 20 or so people that were doing that behind my back. Like I wasn't going to find out about it. Right. So that's actually why we've removed like a couple of people from the Discord recently. A large number of those people also either got in for free or were getting in for $50 when we initially started the Discord. So I guess it's not all that surprising. It's just super disappointing that people that you put a lot of trust and faith into kind of use that against me and then decided to try and turn it into pay me instead of just like doing what we've always been doing, which is trying to help people without like consistently e-begging for people's digital hugs and e-money. So, yeah. How much you want to bet that Tread and Water account is brand new? How much you want to bet? I guarantee it. Yeah, of course it is. I didn't know that there was different gap types. Well, now you do. Now you do, Joe. Jackie called GME 10 and 20. How are you going to call him a grifter? I mean, just to add to that comment, Calvin, it's hard to call me a grifting shill when I have consistently given people the bottom of GME stock, not once at 2080, not twice at 19, not 3 times at 20, but 4 times at the $10 spot too. And I mean, we did it all prior to that, but it's weird how people come up with shill and grifter because maybe your political views don't align, or maybe you're a librarian versus a Republican or whatever you want to call yourselves, right? So, yeah, I think mostly what the issue is that just people simply just they're incapable of using common sense, logic, and thought when it involves money. So, yeah, I did record that, Rick. I did record that, and I'll upload it on the YouTube later today. I'll upload that on the YouTube later today for you guys, the fair value gap lesson. But yes, I did record that. Yep. Excuse me. Oh no, there's no troll and salty. I just wanted to get it out of the way so that, I don't have to deal with people getting secondhand information or trying to twist the narrative in that I'm some sort of like narcissistic douche that's stealing everybody's plays and taking all of your money. I just want to make sure that like we get that out there so that people kind of understand like this is a lot deeper than people begging for money. We're trying to build a community of successful traders that just want to have a better life. I don't care about all your little gay drama. I don't care about all your gay little fucking how much money you make and how cool your charts are and how perfect a trader you are. And I just literally could not give one singular shit. I want to buy a ranch and I want to watch all my fellow retail traders kick ass. And that's about it. So all ulterior motives are dead. Exactly. Just don't talk to me about being better at COD because I'll fucking crush you. That's a lie. I'm actual dog shit. Who said that? Shut up, Jackie. Three types of gaps: fair value, technical, and regular. DJT might be hitting that profit target. Ooh, look at that, folks. Almost there at that full profit target. Fuck, we are a little bit early on this thing. Hey, we are just a little bit early, but that's fucking beautiful. That's over 50%, I think, from the lows. That's 60%. Holy cow. That's cracked. GME, good little bounce and recovery there. Where's Corsair? Corsair still 11% on the day. Where's Trump Coin? Where's that thing going? Oh, dropping a little bit, 45%. Still incredibly high. Where is MSTR? Gree, Wolf, Mara, XCN. Ooh, Jasmine, a little 10% pop. Link. All right. SPY still trying to get that breakout. Still trying to get that inverted head and shoulders breakout. Again, finding some good support off of that 536. 536.60. Bro, with all the hackers on those games, I don't know how y'all play. Well, I just assume that I'm so shit at the game that I can't tell who's hacking. I just assume that somebody killed me because I'm fucking terrible. So. Oh, and then we have Mike Bro Shanahan with the 5 gifted memberships. Legend. Thank you, good sir. Salty Dog says, I can't even play COD anymore. The new update murdered it. It did. It did. Because every time that I play multiplayer on Call of Duty, I swear, spawn, die, spawn, die, spawn, die, spawn, shot a bullet, die. Fucking like 3 seconds away from throwing that motherfucker at the TV. Not to mention every fucking update they do for the goddamn games requires 97 terabytes of fucking data. So it's like, oh, you wanted to play Call of Duty after the update? Sorry, that's going to be 4.5 hours before you can play. My bad. Fuck. Fucking sons of bitches. Yeah, Sky Daddy playing hardcore. That nope. Black Ops 6. Why is that so hard to say? Dude, gaming updates kill me nowadays. Talking shit on COD isn't fun anymore with all the pansies. That's because you get voice chat banned for saying the dumbest fucking shit. I got voice chat banned for calling some little kid gay, I think. And by little kid, I'm pretty sure he was like 15, and he was talking way more shit than I was, but pretty sure I called him gay and then got a 2-week ban from fucking Call of Duty. So that was rough. No, the one time we had 4 people watching the one time, including my wife, and I got voice chat banned in real time, and we still don't know what I got banned from. Kids today would never survive Halo 2 lobbies. Let's be honest, right? Kids today would never survive Halo 2 lobbies right now. It's impossible. They would never survive. Oh yeah, the Halo 2 lobbies were litty titty. Fucking dude, the fucking sword and the sniper. Oh man, those were goat lobbies. Sword snipers. Those were fucking awesome. Yeah, and the old what was the fourth Call of Duty? What was that one called? Just Modern Warfare, right? I think the Call of Duty Modern Warfare, like the fourth one, dude, those lobbies, the amount of shit talking that went down in those servers was cracked. It's fucking awesome. I miss those good old days. So everything for like the last hour, folks, has been kind of stuck in mud with the exception of DJT and the Trump coin. Mostly everything else has like super chilled out. Even Tesla hasn't really gone anywhere. Nike's given some back. Siri gave some back. Intel still doing really well. Very impressed with Intel so far. Your route to 180 was so fun to watch play out. How did you land on the 180 price target? I have an indicator that I kind of created that on the 4-hour time frame. I think it was the 4-hour, or maybe it was the 3-day. I can't remember exactly. Where's route? So on the 4-hour time frame, all the way back to that period of time, there was an indicator signal left right there. So there was an indicator signal left right there at the top of this candle right here. And that was at 179.64. And that has been open since all the way back there on July 2nd of 2021. So that was basically why I had been aiming for that profit target since the dawn of time, it felt like. But yeah, that's basically how I came up with that profit target. Also, I mean, if you just look like a little bit to the left, like where price action was when it got to that range, you can see the resistance and support that was kind of provided within that range. So it made sense, but yeah, I'm not going to lie. Most of that came off of my little indicator signal thing that I have going on there. So SPY making a nice healthy breakout after that inverted head and shoulders, folks. Really nice breakout after the inverted head and shoulders off of the harmonic completion. Very, very nice. That's a new high since the harmonic completion as well. How about that BTC? Shout out BTC. Intel setting up for a golden cross. Yeah, if Intel has a good earnings, that should be that could turn into a golden cross really quickly, and it would be really, really fucking strong. So I'm very hopeful and very positive on Intel. Why did you use the 3-minute time frame for the GME? Well, because that indicator, even if it's a small time frame, it doesn't mean it's not going to work. You know. It just the reliability of it drops a little bit, but like the indicator has a 95% success rate, meaning 95% of the time price action will come back and fill those blue little things that you guys see on the side of my chart, right? Like think about IWM and RTY, for example. RTY has this indicator all the way down here, and that was left from all the way back over here. Right, that was left from all the way back here in October of 2020. Now, I don't remember exactly what time frame that was left on, but there was an indicator signal left all the way back from 2020 on some time frame from all the way back there. And look at how far of a drop it was. It came within pennies. Now, it didn't quite get there. It still can, but 32% backwards on that thing. Right, so it's not... The time frames, I use them like, for example, on SPY, when I get a 1-minute, indicator signal on the SPY, I want to see it come back to that relatively soon, right? Versus the daily where I want to see it come back like a long time from now. But having said that, it doesn't, the reliability of those indicator signals doesn't necessarily, I'll say, change. So like the one that's left on GME 3-minute at 29.20, it's still there. Right, just because it's a small time frame doesn't eliminate it. It just means that the odds of getting back there, when it happened on the 3-minute on that day, I wanted to see it fill quickly, right? And then obviously it didn't. It's now taken nearly 3 to 4 weeks for that to fill, but still there. actually a complex inverted head and shoulders? No. On what? Sorry. Who said that? Zank job on complex inverted head and shoulders on what? Sorry. Man, I rocked it today. NVIDIA 100 calls for Monday. SPY 0-day calls and puts today. Good job, James. Question about your blue indicator. What would make a change? Literally nothing. Absolutely nothing. That indicator is very much mechanical. Specific parameters need to be met for that indicator signal to flash off. So if it dips below the yellow, does it dips below the... Wait, what do you mean? What do you mean dips below the yellow? What if we get a golden cross on the Fib time zone day? That would be fun. That'd be fun. We're pretty close to that Fib time zone here. Right at the end of the month, Wednesday next week. Wednesday next week is that Fib time zone on GME. So very cool. Very cool. Corsair still doing well. SPY, fine. We're now into the fucking boring part of the day. SPY, 1 minute. Oh, for that inverted head and shoulders. I wouldn't call it complex just because there's no like third and fourth shoulder. I would just say that you have a clear shoulder there, a head here, and a shoulder there. That's what I would say about that. Hopefully that kind of makes sense there, my man. GME crawling back just a little bit, slowly but surely. The world keeps on turning. Slowly but surely, the world keeps on turning. Look at the micro piece of gap that is left. Fuck, that's AIDS. Came within like 10 cents of filling that gap. Balls. Still very likely can. Alrighty. I trade bearish days inverted on chart. Did you see the NVAX discussion this morning pre-market? No. What were you talking about on NVAX this morning? That looks like a diamond bottom. That looks pretty clear cut to me. Good little diamond bottom breakout on NVAX. I can't believe how much this thing has retraced. That's crazy. Crazy that we caught the low on that thing before it literally squeezed like, what, 500%, I think it was? Yeah, 510%. Fuck, that was sick. Well, I see on the most recent highest high to the lowest low on that diamond that it made that it's just poking its head above that 236. So that seems pretty important level right there, 720. So you want to start seeing NVAX close above 720, getting above both the daily 50 and the daily 236 there. So that's going to be what's really important on NVAX there, opening up the indicators, RSI through the center. That's good. Full profit target on that diamond is taking you to about $9. So could be a nice little dollar or two left on NVAX, potentially towards that $9 spot. That would make some decent sense. No sick days. There's no such thing as sick days or vacation days. I don't know what those are. What is that? Okay, let's see here. SPY, still chilling. Where's the dollar? Speaking of bonds, where are bonds? Ooh, that was a good move for bonds. Gold down big today. The dollar. Lower! I need it to lower. Vacation. Uh-huh. Like right now?
His questions in YouTube chat, but they're working on it in Discord.
Yeah, in a bigger diamond. Well, there's only this one right here. There's no other diamond outside of that. This guys is not a diamond. I would definitely not call that a diamond if that's what you're trying to go with. Did we fill that indicator signal? Hold on a second here. On the weekly time frame, there's a indicator signal at 495, and it doesn't look like we filled it. Did we? How close is that wick? Oh, hold on. Low is 501. What's the open? 493. So no, we didn't actually fill that indicator signal on the weekly. Maybe what I would do is focus on like this trend line right here. Like there's definitely some sort of trend line that you can draw on all of those lower highs and lower lows. There might even be something harmonic here that I haven't drawn. No, it's too far. No, it's just too far. What if I pull it there? Is that better? Yeah, but then we've already completed it, which was probably, which I assume was probably right there, right? Yep, it was. And then you caught a really nice move off of that harmonic. But now it's come back down. Could you say that's back testing? I guess. No bullish divergence on the weekly. MACD has some bullish divergence, but daily. I really think the most important thing on NVAX, at least going forward, is going to be that daily 50 and that macro 236 at 720. That's a really, really important spot. Yeah, that spot right there, that is what really is going to matter for this one. I'm trying to find what you guys were saying in the holding the 236 from the low, holding the 886 from the all-time low to, or all-time high to all-time low. Massive. I see it, wife. My eyes do function. That's, yeah, so I'd say you're mostly seeing what we're seeing. I do see that wedge you're drawing. I don't like drawing wedges, so I typically don't. I obviously see that upper trend line that you've kind of drawn there, right? That's building that wedge, so I do see that for sure. And then you were saying something about the 886 taken from, I'm assuming, the all-time high to the all-time low. Zoom back in. Oh, yeah. Your macro 886 there. Yep. I'd say if you want this thing to continue, it really doesn't get any simpler than breaking that daily 50 and the 236 at 720. If it comes back, I mean, you're going to look to retest that very same zone that you talked about, if not even to that full indicator target just below $5. And then that diamond bottom that it made right here, the full extension of that profit target is $9. So that's what I would say about NVAX. That's what I would say about NVAX there. FNGR. Well, still managing to hold whatever this particular range happens to be. Broke above the 236. That's positive. 80% chance of going to the 382, where also your macro 0.5 Fibonacci is. So $1.70 is going to be a bitch. That's a fucking straight out guarantee, because you've got your daily 200, your micro 382, your macro 0.5 Fibonacci. If I open up the RSI, that's probably right where the bull zone test is going to be found as well. So $1.70 to $1.80 is going to be a nightmare for FNGR to get through, but it certainly looks good off of those lows for right now. Yeah, definitely looks good so far. But yeah, RSI is broken above the center. Good MACD cross right near the center line as well. Really nice MACD cross. Great momentum off of that. Broke above the daily 50, but still below that daily 200 in those macro fibs. So that's what's really, really going to matter here, folks, is that macro 0.5 Fibonacci at $1.70. It's going to be a big, big important spot. Can you do me a favor and look at Eutelsat? Eutelsat. Effing. Okay, let's try. Assume this thing. Looks like we looked at this thing before. Long. This would have been a long fucking time ago. I wonder if it was you that I did the analysis for. Man, this was a long time ago. Holy moly. I can just tell by the Fibonacci's. What the fuck was even that? That is crazy. All right, well, a couple things are immediately noticeable. You rejected the shit out of this golden pocket. Then you slip below this macro 0.5 Fibonacci. Now you've also slipped below the macro 382 at $4.14. So for this thing, you're resting on the weekly 50 period moving average, and you can also see the very clear range that we currently find ourselves in. So with these flat bottom triangles, more times often than not, those flat bottom triangles actually break to the downside. So I would not be surprised, even in the slightest, to see this thing come back down and retest 250. That would make a lot of sense to me. It does have a golden cross, which it's currently testing. So obviously that is a fairly positive thing happening on the chart, but the chart itself and the candlesticks, and it just doesn't look overly enthusiastic. So just watch how it reacts to 330. That's a huge level, is 330 on that thing. NTAP. There's not going to be any flow for unusual whales on Wolf because there's not enough people that trade it. I promise you, when we open this up, there's going to be very limited flow because there's not enough people that trade this thing. That was yesterday. Yeah, there's a lot of there's some interesting flow coming in on Wolf. Still not enough money to get me excited, but I guess it's interesting, I suppose. NTAP, big ass death cross. That's the first thing that I immediately notice. Well, I would just draw this. I would just straight up draw this, and I would just say, that was the start. That was bounce. That was bounce. That was a bounce. That was a bounce. And now you're right back at that same trend line again. If you're ever looking for a dip the buy opportunity, that's where it's going to happen, right? Because you've seen it on that trend line bounce like 5 separate times before. So I would say that if I was looking for potential on NTAP, I mean, you're at that potential spot right now. If it doesn't hold here, you're going to break that trend line, and breaking that trend line the few times before has led to some good healthy bounces, getting those wicks below the trend line. But if you lose this trend line, I mean, a test of that golden pocket would make a shitload of sense, but I wouldn't really worry about that when you have this trend line showing this stock chart literally just making higher lows and higher highs every single day for the last, 20 plus years, almost 25 years of just going all higher highs and all higher lows. So that higher low right there should be a really convincing buy signal. But again, I'm not telling you to do anything. But that looks pretty good. It's hard to ignore that or argue with that. Alrighty. So SPY wicked into another higher high since that inverted head and shoulders. Since that little inverted head and shoulders and hold of that 536.60 spot that we marked off here. The VIX hasn't really puked very much for a 2.25% move on the SPY. That's interesting. GME hasn't really moved up much or gone anywhere. Still very, very calm, relaxed. Big ass death cross. Big ass death cross, boy. How much coffee do I have left? I still have lots. All right, I'm going to heat this coffee up one more time, and then we'll probably go until noon, and then I'll shut it down at noon/2 p.m. Eastern. All right, so we'll go for like another 30 minutes here. Just going to go heat up my coffee. She's a maniac, maniac on the floor. And she's dancing like she's never danced before. Craig Zone! Hey, buddy. I had to bring the same energy that your profile picture and your words bring. The silence is so loud. I can't. I keep forgetting to play music, so I'll have to remember to do that. I keep forgetting though. SPY, a little bit of a retracement there. A little bit of a retracement on the SPY. Root back to 150. That's crazy. LPSN. So hasn't really accomplished much since the last time we talked about it. Talked about that daily 50. Talked about that golden pocket. Talked about this 382 here, right? And the importance of breaking above that. And you can see the resistance that has been provided at that range so far. So we know what LPSN needs to do to see some bullish movement to the upside. And that's basically break 81 cents. So LPSN just hasn't really moved too much beyond kind of what we've already mapped off with that bullish divergence in this little breakout move. But we haven't done anything with this breakout yet. So we just have to be really patient and let this just continue to develop. And because it's an illiquid stock, it just means that you got to let it kind of just do its thing for a little while until some buyers start to show up. You know, it's kind of the same thing that Grove is going through right now too. It's just illiquid stocks where if the buyers aren't just, you know, jumping all over it immediately, the computers just go beep, boop, beep, beep, boop, beep, beep. Boop, beep, 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 boop, beep, beep. Crypto. Bitcoin is green again on the day. Trump coin now down to 40% green on the day. Cool thing about Trump coin now is you can actually draw a proper Fibonacci on this thing from the all-time high to the all-time low, and it should be at the 382. Ooh, it came very close. Hopefully it doesn't slip below that 236 again at 1250. That would be not good. Be a fat rejection. All right. What was the full profit target on this? I think it was the golden pocket, wasn't it? Yeah. So still a long way to go from there for that full measured move. Let's check in on some GME flow. GME flow. Definitely bullet or bearishly favored today. That's for sure. Definitely a lot more premium on the bearish side. Let's check in with the net flow. So the net flow on GME, very much bearishly favored. However, one of the things that I taught you guys yesterday about using unusual whales is focusing on that center line and how much premium there is. And let's all be honest, the bearish premium is absolutely nothing. It's like 100 grand total. And the bear or the call premium is definitely bearish right now, but again, not in a overly significant way. Only about $1.3 million. So nothing to be overly concerned about with regards to the flow, and I don't see anything that catches my attention or spooks me or gets me excited. It's just kind of bleh, bleh, oobity blue bleh. QSI still finds itself at that little golden bip zone. The old golden bip zone. Ooh, big daily indicator signal beginning to flash off on QSI. It's exciting. Bollinger Bands on the daily are tightened up. They're tightened up. Oh, that coffee is horrendous. Heated it up one too many times. Hope you're doing good, Seruvelis. Fuck, I probably just destroyed your name. So, how is everybody in the chat box doing? How are you guys holding up so far this week? Now that we're halfway through the week, how are you guys holding up? How have your weeks been? What have you gotten up to? Have you made any good trades? What do you guys got going on? GME and the rest of the market, folks, is borderline stuck in quicksand here. We are not going up. We're not going down. We're just not moving. So large amount of patience across the board right now. God, I hope Corsair is in a fucking bump and run, dude. That's going to be so cracked if it is. I also hope Hertz is in a big bump and run too on the weekly. This thing continues to look fucking awesome, guys. That potential bump and run idea on Hertz, this thing continues to just look fucking excellent. Very, very impressed with what I've seen so far. Very impressed with what I've seen so far. Sorry. It's the evil genius in me coming out. Misha, bro, what are you doing? What's your favorite brand of mountain bike? I love Santa Cruz. Funny story, actually, about Santa Cruz. I don't think people really care, so we'll save that for another time. I wake up every day and just thank God I'm alive and still healthy. We are pedaling water, which is fun. So far, so good. Bought some good buys. I'll say I bought Hims and Siri. Good job, man. Exited Rix at 607 today. Good job. Straight chilling. Crushing it, man. Hitting my daily goals. Hertz closed down its dealerships around me. China. Did you buy their e-bike, the new one from Santa Cruz? I did not. That motherfucker, bro, listen, I have a hard enough time spending $3,000 on a mountain bike. When I see 13 grand on a mountain bike, I'm immediately like, okay, would you prefer to kick me in the dick or the dick and the balls at the same time? I just can never justify spending that kind of money on a mountain bike. It's just so crazy. Did you ever read my 741 paper? No, I didn't. I'm sorry. I did not read it yet. No. I got my ass handed to me on some Tesla puts, then SPY puts, but then made most of it all back on the Tesla and SPY puts. Good job. Thank you for what you do for us. Thank you for helping us out on the SPY every day. Thank you for being here, my boy. $1,300 on a mountain bike. Yep. And I think I probably didn't even, that's probably not even the accurate price of it, to be honest with you. Because I'm pretty sure it's actually worth more than that. Yeah, I think it's this one here, this Vala. This is the new one. And then where is the pricing? Yeah. Yeah, so look at this shit, right? Like their highest end one that they have, That's 17,000 United States dollars. 17,000 USD. Are y'all fucking cracked? That I'm sorry. I love mountain bikes and I love mountain biking, but I'm sorry. That is absolutely fucking ridiculous. Like the price of a cheap brand new car or a mountain bike. I'm sorry, but that shit has always blown my fucking mind. I never fucking understood it. Yeah, that's actually fucking crazy. Yeah, we'll have to bring back those Friday rich people conversations. We'll have to bring back those Friday rich people discussions that we used to have. You guys remember those? Those were good times. Santa Cruzes are for people that want to look like they ride bikes. Thank you. He's probably not wrong, chat. There has to be a demand for it for them to price it like that, though. There's a demand to some extent because, like, a lot of those professional racers and, you know, your average rich stay-at-home dad, you know, 17 grand on a mountain bike, they can swing it, you know? And there's enough rich people in the world that will buy overpriced bullshit, you know? So there is a market for it to some extent. For me personally, I simply cannot understand nor justify spending tens of thousands of dollars on something that has 2 wheels and a chain. For that kind of price, I expect 4 wheels, Apple CarPlay, and for it to make me a macchiato, you know? Yeah, and that's true too. That's true too, Chuck. Yeah, legacy brand name. Yep. Yeah, it's the same reason that people will pay $2,000 for a fucking iPhone. You know? Is an iPhone really worth $2,000? Well, probably not. But it's an Apple product, and I'll feel like I'm cooler and smarter and more fabulous than everybody, so I'll buy it anyways. Not me. I'm just, you get what I'm doing. Because fuck Apple products. For $17K, it should start flying. You ain't fucking wrong. So SPY now at that same macro 236, folks. We are now right back at that very same important support level at 536.60. Again, we meet again. Good sir. The rest of the market, I'm telling you guys, we have just like mega chilled. The rest of the market has like super mega chilled out right now. Las Vegas Sands, I really want this thing to come back. I want this thing to come back and give me another opportunity here. I should have bought it when it got there, but I didn't see that harmonic. Oh, let's see. Anything else of interest in here? Not really. Not right now. Excuse me. Double bottom off of that. Estee Lauder. This thing, wasn't this or Elf up 10% today? Yeah, they were both up like 10% today. They gave back a lot of those gains. China stocks were really good today. XPEV and Baba, they both did really well. Baba has given back a large amount of those gains, but still good. Rig. Why were we looking at this thing again? Oh, right. That support and that divergence. AI, that was on that support level that we talked about. Indicator targets higher. There's still some good opportunity, but man, I'm not spooked, but I'm just like super, super, super cautious about what we're seeing in the market right now. I just don't. This feels like a huge pump that they're just using to sell, like they're selling that rally. That's kind of what it feels like to me, but I could be fucking way wrong about that. That's just how it feels. It feels like they're just making these big pumps so that they can sell that shit right off into retail's hands, and then dump a Ruski on everybody. Martin Gustafson, Yeah. Yeah. Good bikes though, and I like the e-bike side of things. Like they're definitely pretty sweet. I definitely think they're pretty sweet. Found out why Trump popped. The top 220 Trump holders will be able to register for a Trump dinner with the president. Is that real, Maddie? Is that real? If that's real, I need to become a top 220 holder so that I can get some inside info and trade on inside info. I want to make millions off of inside info too. I mean, I may not be Pelosi, and I may not be Marjorie Taylor Greene, but I would like to be able to trade on inside info to make money. That'd be great. Manipulation's cool when it works for me, you know, but when they manipulate the markets against me, well, now it's bad. You know, when they manipulate markets against me, it's really bad. But when they manipulate markets for my calls, dude, so bullish and so rad. It makes me so happy that they manipulate the markets, especially when they manipulate them for me and make my stocks go up. That's so cool. I mean, I remember when I first started on the GME journey and did all that. And I remember that the whole purpose was to fight against manipulation. And now that somebody in power that everybody apparently likes does it, now it's like the cool thing to do. So now I've hopped on the train too. I've now hopped on the train too. So I think it's really cool that you can manipulate the markets for your own personal benefit. And I'm looking forward to try and do that for myself. So I would like to become a top 220 Trump holder so that I can get some inside information so that I could share it with you guys privately. And so that we can make a shitload of money privately. So that would be cool. I think manipulation is really cool. And I think that it should stick around in the market for a lot longer. Why even fight against it, right? Manipulation, why even fight against it? It's not like we make a difference, so who cares, right? Manipulation's so hot right now. It's good. That's good. It's good to see the chat box can have some fun. Good to see the chat box can have some fun. You kill me sometimes? Well, I hope I don't kill you. I'm not trying to kill you on purpose. And we've got a new Discord member. Woo! Let's go, baby. Let's go. A new Discord member. And he shot it in there with 12 minutes left on our day today. Not in the market, just on our day. Okay, while we have a moment in time, while the market continues to do quite literally nothing, why don't I ask the chat box, because there's 755 of you currently still remaining in here. Gosh darn it, where did everybody go? So let me ask the chat box, and then maybe this will be good content for the next time that we're on live. What the fuck am I doing? Oh, I'm trying to go to my subscriptions. Duh. So, my question is, what is something that you would like to learn about the stock market? Or what is something that you would like to learn about trading? You know, I would love to hear some of your guys's criticisms or, constructive criticisms or things that you think that we can make better, or maybe questions or information that you're trying to gather about the stock market. I'd be happy to answer some of those questions while we have some moments in time where the stock market is quite literally not fucking moving. And by the stock market, I mean fucking everything. Wendy's. Is Wendy's at my fucking indicator thing yet? No, it's so fucking close. So close. Did I set an alert? Oh, yeah, I definitely did. Oh, I definitely did. Good. You only focus on your right calls, but do you ever look back at your bad calls? I mean, I make fun of myself almost weekly on my bad calls. So to answer your question, yes. Okay, everybody, get out your red noses and your clown costumes, right? So TTOO, who can forget our favorite trade of last year, TTOO, where we were buying this thing back over here at dollars and now it's worth 11 cents. So shout out to Jackie for that one. That was a good one. Hey, GoPro. So remember we were looking at it over here with all these touches of divergence and that RSI or harmonic completion. And then it did have a little bit of a run, but we wanted to get it way higher and then it's completely died. So there's another clown costume for Jackie on GoPro. We had Wolf with an O. So you guys will remember that we were trying to long it at this macro golden pocket as well as up here from before. And then that thing gapped down and lost a shitload of money on Wolf. So there's another clown costume and shitty trade that Jackie made. So it's not that I don't go over my poor trades. It's just that we don't really make a whole lot of them. Right? So it's not that I don't like talking about them. It's just that we don't really make a whole lot of really bad decisions because the whole purpose of this channel and everything that I teach you guys is about risk management and making sure that you protect yourselves at all turns. So most of the things that we look at are fairly protected. But, you can make the argument that LPSN has been shitty. I mean, you could also make the argument that if you think it's shitty even after it went up 150% and you probably should have taken some profit, I mean, that's kind of your own bad. But you can make the argument that LPSN has been shitty since we longed it back up over here and back on these lows over here because it is down technically, right? You can make the argument about Unity, right? Because we bought Unity back over here and then it had that huge gap up. And if you didn't sell, well, then it came all the way back down and you were red, but now you're green because that's literally where my exact position happens to be on Unity. So again, it's not that we make, a shitload of bad decisions. It's just like, what is the purpose of me lingering on mistakes? They were mistakes. I learned from them. We write them down, and then we just go to the next trade. Am I supposed to sit there and fucking have like a 10-hour seance and a fucking what should we have a funeral for my fucking account for losing $3,000 on Wolf? You know what I mean? Like, I don't know. For me, I'm not going to come on here and just be all sad and soy about making, a couple of bad trades or a couple of good trades. We make the trades, they work or they don't, and then we just go to the next one, So, yes, I think you can learn a lot from them, like why the setup didn't work versus why the others did work. But that's what we do. Maybe you just need to spend more time in the community there, Moo. But that's literally what I do, like all the time. So what? You want to generalize all the gray names and disregard their opinions? That's just douchey. Okay, well now I am ignoring you. So, yeah. Oh, he's trolling the other mods. Well, then just remove him. I don't give a fuck who that guy is. Fucking little gay ass gray name. Fucking talking all this shit. Oh, he's talking to Ben, but you're talking to one of my mods. Why are you talking to one of my mods like that? That's just stupid shit. So you probably don't want to do that. Where are some of those other? Oh yeah, and Fox F, right? That was another shitty trade that we had. Fox F, right? Who could forget Fox F? We bought that thing at like $33 or something off all those bullish divergent touches and that big harmonic completion, and then it literally just started dumping. Now we cut it way before it made this big dump, but even still, tried to take an entry here and it didn't work, and then it just dumped, right? So that was another shitty trade. I also see that there's a RSI wedge on Fox, which is kind of interesting. So, I mean, I could sit here, right? And just like you suggested, right? I could sit here and I could go, okay, why didn't this trade work? How come this trade didn't work? What did we do wrong, right? Well, we had the harmonic completion and we had it at a macro golden pocket and we had divergences during that whole period of time. So how come it didn't work? It just didn't work. This is the stock market. Not everything is black and white, cut and dry, right? So I don't have an explanation as to why it didn't work. All the technicals suggested that it should have. It just didn't. But like, am I going to dwell on it not working? Of course not. I just cut the loser and go on to the next trade. Like sometimes there are trades that we can learn some things from when they don't work for us. Right? Like there are some lessons that can be taken from trades that don't ultimately end up panning out for you, but Like, again, I'm not going to just sit there and dwell on mistakes or bad trades that were made. You know, we cut those losers. We understand why we took that trade. And if it didn't ultimately end up working, then we look back at our decision and did we make it a good decision? Well, I think I did with Fox F when we had all those divergences with that harmonic completion, right? So I made the right decision. And from a risk reward perspective, I made the right entry. Just didn't work, but made the right decision, right? So I agree that you can go back and you can look at some of those things and you can learn a decent amount from them. But like, this is a YouTube show where I only get 7.5 hours every single day to get everything out of the way that I want to. And spending an hour of it going over, a shitty trade that ultimately had good reasons to make that trade and just didn't work. It's just a waste of time. So that's what I would say about that. That's what I would say about that. LPSN, we already kind of went over. It literally hasn't gone anywhere. I thought you did go over failed trades sometimes last year. We did. We've gone over lots of those failed trades. Could you please explain some of your recommended best practices for determining when to go long on calls? Number one, it better be at support. Number two, the implied volatility better be extremely low. And if those two factors kind of handshake one another, then that's a good reason to long call options. Doesn't matter what stock or what asset it is. If you have a stock that has relatively low implied volatility and the stock is at a support level, that's a good time to buy call options, right? And the reason it's a good time to buy call options is for a couple of different reasons. Number one, the low implied volatility means that the options pricing is likely to be relatively inexpensive compared to historical pricing. So that's one reason. And then number two, the reason that you want it at support is because, well, I mean, it's support, right? Now, you can say the same thing for resistance, right? I'm just using support in this instance. But if the stock is at support and you have low implied volatility, that means that you're buying the stock with reason to do so, right? Because that's at support, and we know that support leads to bounces. And then number two, another reason that you have to buy those calls is because you're buying them when they are relatively inexpensive compared to times past, right? And that's with that low implied volatility. So if you're looking for the best environment to long the shit out of call options on any asset, you want to identify assets that are at support and have low implied volatility. And then obviously you can throw in a couple of other little caveats, right? Like you can say it's at support with a harmonic completion and bullish divergence with low implied volatility. That is the easiest call option buy of all time, right? Because you have reason to buy, cheap option, right? So that's what I would say about my approach to doing call options and the best practices for that. Coles, you can't say QSI was a bad trade. You absolutely cannot say QSI was a bad trade. Anyone that says that QSI was a bad trade has not been listening since the middle of last year, because we had QSI from back down here before it went up almost 800%. So you can't call QSI a bad trade. You could sure make the argument that Coles is, but Coles is a long-term trade. It's not even a trade. It's a long-term investment. So for this one, you guys can clearly see I'm fucking red on this thing, but the plan wasn't to buy it here and then sell it next week, right? When I tell you guys I'm buying something for the long term, my intention is to hold that thing for a very long time, right? Over a year. So with Coles, I'm, again, not overly concerned about, but if you're going to try and use QSI as a bad trade, that might not be the best one that you choose today, my friend. That's what I would say about that. do 80% hit rate on gold. Good job. Just going through your guys' questions or whatever here still. Just give me a second. How's the Shindicator looking on AMC? Ooh, it's spicing up. It's spicing up. Yeah, if you guys didn't pick up on that, Jackie Latits means like I'm in a constant state of being jacked to the tits. So if me like screaming at you or yelling at you makes you feel some type of way, I'm sorry, but it's literally in the name. So. I beg to differ. I've been part of the community for a year and part of the Discord for almost the same amount of time.
Oh, that was the gray name.
Just because I can't afford a YouTube membership. Well, a YouTube membership is 1% of the Discord membership. And it doesn't mean that you're less than anybody by having a gray name in the chat box. It's just maybe some of you guys with the gray names are taking it really personal. And I don't know why you're doing that, because nobody's writing you off and nobody thinks you're shitty. It's just a long-standing joke about the gray name. So try not to take it so personal. God damn. I'm still just trying to find your guys' questions here. If anybody has any more questions. GME bip bip. It went up 10 pennies. 10 in 30 minutes. How often do you trade SPY options? Every single day. Like literally every single day. Didn't a girl in the cord pay off her mortgage with QSI? That is correct. That is correct. We were there for that. Good times. Nutfilled, good to see you, buddy. RC said he loves the Grays. See, exactly. You see, exactly. RC said he loves the Grays. I don't know why people are getting so fucking upset about it. The food industry is going to change. Why is the food industry going to change?
The United States is actually removing all artificial coloring, I believe, from all of their food products.
You mean I can no longer have a blue Slurpee? What? Wow. The industry has changed forever. Are there any assets or industries which you avoid, or do you trade everything? I'm not going to say that I avoid it, but I don't typically trade consumer staple stocks just because they're already fairly expensive. So like your Walmarts, Costco's, Sobeys, like those kind of stocks, I don't typically trade those. And I also don't trade like any of like the boomer kind of stocks, like Sherwin-Williams for like building materials, like those kinds of things, like Triple M. I don't really trade those things. And then, yeah, I would say that those are probably the two sectors that I stay away from. I think the last one that I mostly stay away from is the like super volatile healthcare stocks, like the ones that are like making a drug or building like a product or something like that. And you have like the phase 1, 2, and 3 trials. I tend to stay far away from those as well. First Jackie stream I ever watched, I thought he was a drunk college kid yelling at us. Well, you're not that far off. I just didn't go to college. My YouTube membership expired after I had to cancel my card, and it won't let me rejoin. I hate being a gray name. Mr. Red Dye, 40 dye is cooked. Food dye. Is that the only reason you think that the industry is going to change, Chico? Is from the dye, the food dye? Yes, I did see that Ryan unfollowed Bitcoin. I did see that. You ever trade MSTR? I traded it once last year. Outside of that, no, not usually. I traded it once last year, and that was on the low back over here. When we were looking at this like rising wedge into this resistance here, I traded it from back here. And that worked out pretty well. I didn't get it all the way to the end of the top, but I did catch a good little breakout there. So, but yeah, I don't usually trade MSTR. No, not normally. Bitcoin still holding up quite well today. SPY just not going anywhere, like literally not going anywhere right now. You don't trade quantum stocks. Oh, wait, never mind. You trade QSI. That was a good one. That actually made me laugh because I got the joke. Belated thanks for getting to my question. Not a problem. And he's not drunk. He's smoking crack. See, exactly. You get it. Jackie's 21 years old, confirmed. I love the grays. How can I invest in sunscreen? Merc? Thoughts on RFK's autism comments? Okay, here's my thoughts, all right? In 3, 2, 1. All right, that's my thoughts. Would you say that there's a bull flag on MSTR? Probably retraced too much. Probably retraced too much for me to call it a bull flag. Like, I assume that you're talking about this right here, hey? I would say that this probably retraced a little too far and a little too deep for me to really call it a bull flag. But I will say it looks nice. Like, the structure is nice and tight and clean. So even if it's not a bull flag, I mean, you can measure a potential profit target on this thing like this and maybe put that there, and that would take you right back to the all-time high on MSTR. And there is an indicator target on MSTR at 469.40. So it'll be interesting to see how this thing continues to move. But if Bitcoin is any indication, crypto looks decent. It's just my real true concern is Bitcoin getting through this golden pocket. Like that's really where my concern lies now for Bitcoin. If Bitcoin gets through this, all concerns gone, right? But until that time, it's got way more work to do. And then I see XCN now breaking out again, up 21% on the day. So very legal, very cool. SPY coming back down towards 536.60 again. GME back to 27.60, down about 0.5% on the day. And we're seeing a couple stocks flip a little red or back to break even. So a large amount of that movement that we saw earlier this morning has kind of been not negated, but we have kind of chilled out a little bit here. Jackie, NBA predictions tonight. All right. All right. Celtics by 30. Cavaliers by 15. Warriors by 7. There you go, folks. There's my predictions. So get your parlay with your parlay to parlay that parlay into another parlay that could parlay that cash into another parlay tomorrow that could parlay that parlay into a further parlay, sponsored by DraftKings. Oh, God, good times. Yeah, so Celtics, Cavs, and Warriors. Those are the 3 winners that I have tonight. Warriors! Can you talk about what a dark pool is? A dark pool is just where rich people or people with really big accounts can buy and sell stock without having a significant impact immediately on the share price. So, let's say, for example, that you were, now, again, I'm going to use GME, but please don't take this conversation seriously regarding GME. If you were an insider, right, on GME and you wanted to buy, insider is not the right word. Let's pretend that you're a hedge fund and you think GME is a really, really, really good investment right now, right? And so you're like, well, I want to buy GME, but I don't want people to know that I'm buying a lot of GME. So what do? You route your orders through the dark pool. And those dark pools, right, are not going through lit exchanges, so they don't have a nominal impact on the share price. So if you're trying to accumulate shares on lows, right, because you're bullish on the stock and you want it to break out, you're going to try and route some of that through the dark pool to have a limited impact on the share price so that you can continue to buy the stock at the lows, as opposed to buying on the lit exchange where it goes up and then consolidates and then up and then consolidates and then up and then consolidates, right? Because then you're buying here and then here and then here and then here, right? Rather than buying all four of those circles at the exact same range, giving you a cost basis down here as opposed to a cost basis up here. All right, so that's mostly what dark pools are used for. Mostly. Now, obviously, there's the nefarious side of things, but I don't want to strap on the tinfoil too tight with that one. I'm great because no one gifted me a membership. Well, let's see if Jackie can change that. Let's see if I can change that. I don't know if it's going to get sent to you, but we're going to try. We're going to try. Make sure your gifting's on. All right, that should come through here in like a couple more seconds. Let's see. So we're looking to see if Lawrence Cap gets a membership. Some guy, James, good to see you. I haven't seen that guy in a long time. Some guy, James, good to see you, buddy. So 5 gifted memberships from Jackie Letitz. Yeah. Calls being slammed into GME right now at the ask. Let's see. Thanks, Hacky. He called me Hacky. That's so nice. Thank you. And call me Hacky. Hacky Jackie. Yeah, so there is some little flow coming in. I don't want to say that it's overly aggressive because it's not, but there is some coming in there. Turn over to GME's net flow again. Just take a quick peek here, see if there's anything that has changed. You guys can see on the right-hand side of your screen, we still don't have anything of significance, I'll say, with regards to that. So not really seeing a ton on unusual whales, at least not right now. Kyle O. Mail? Is that how he did it? Okay, let's see if that's that guy's proper username. It is. We got him. All right, Kyle, I'm coming in hot with that Discord membership. Sorry it took me so long. There we go. Got it in you there, buddy. All right. GME 2766. So now down 0.5% on the day. And then SPY still resting just above that 536.50 level again. I don't love this kind of thing going on here. It kind of looks like it's a really fucking, it would be a continuation head and shoulders. So I don't love that, but I don't love that trend line on SPY. All right, let's heat up the coffee one more time. And you got me for about 15 more minutes, folks. So I'm going to go heat up the coffee one more time. And then you got me for about 15 more minutes, folks. All righty. Alrighty. So strapped in for another 15 or so minutes, folks. So Spy not doing much, Jimmy not doing much, Vic's not doing much, small caps not doing much, big dogs not doing much. It's a slow world out there today, folks. Tesla is creeping towards a high of the day. I believe it's very close, actually. It's about $1 away from it or so. Let's see the chat box. GME is good today. Spy about to blow our tits off. You think it's going to go up? Do you think the cat tweets are based on technicals or more like swaps data? I think it's more like swaps data, to be honest. I think he knows something about that. That's how I think he was so accurate in predicting January 2021 as being the peak of his GME trading move. Because if you were on Wall Street Bets during that period of time, Keith actually made a post like 6 months before it even happened. He told us that January 2021 was going to be the peak of GME. So it certainly is interesting to consider the fact that maybe the cat knows something about that swaps data and how it pertains specifically to GME and the price action that we see on a day-to-day basis. It's definitely interesting to consider. I'm back up in this motherfucker. What's up, Berrioso? Based on the flow in the last 15 minutes, Spy is about to dump massively, strictly based on the flow. All right. Actually, that's just going to be a shit show if I do it that way. So I think maybe the better way to do this is probably the net flow. Spibbity Spy. So somebody buying 490 puts. That trader is almost break even. So this person has 490 puts expiring in August. That's the highest premium of the day. And then somebody also sold, it looks like sold 480 puts. That's an interesting choice, 480 and 490, hey? So that's definitely some sort of like iron condor or some sort of like butterfly spread with that 490, 480, because it's a purchase and a sell. And then this one looks like the exact same thing except call side. Purchase call and then a sold call. So as far as the flow that I see right now, it definitely does look like the bear premium is in the lead. Bull premium is negative, suggesting a lot of call selling. But in terms of like for today, nothing immediately kind of jumps out at me for Spy. Big ass cross trade just happened there on 540 and 515 calls. One of those is purchased and one of those is sold. Absolutely certain about that. Short expiration too. Relatively short expiration. Big sweep. Selling 565 puts. I mean, just based on what I see on this chart in front of me for unusual whales, it looks like a lot of put selling and a lot of call purchasing. That's at least that's what it looks like to me. Let's get back to GME on there. The 100K orders are non-existent. Bitcoin, very good. 94.2. Creeping towards its highs of the day at 94.6. So very nice on Bitcoin. And then Spy making a little bit of a push up there. I wonder if there's like an RSI wedge or something. Let's see. 5 minute. Arguably a rising RSI wedge. Well, so far since that bullish deep butterfly harmonic, it's performed pretty well. Any thoughts on buying and holding or trading options on leveraged stocks? If you don't have the money to trade the regular stocks, then the leverage ones, I think that's mostly the purpose of those leverage ones, is to make purchasing them a little bit more accessible. Benny, what's up, Benny boy? Benny boy, what's up, Benny? I think RK assesses options flow based on time events such as swaps and OPEX. Do RSI wedges ever go up? Yes, I think there's actually one on the SPY 5-minute right now. Might look better on the 3-minute. Let's just see. Yeah, so there's one on the 3-minute for SPY right now. And get rid of that. So you kind of got like this going on right here. I think it actually does look better on the 5-minute. So you could try and make this argument. So there you go. So there's kind of like this, right? Or you could try and, again, you can manipulate these trend lines to match whatever, narrative you might be trying to build. But yes, there is ascending channels and wedges as well. I think IWM actually had a really good one on the daily recently, if I remember correctly. Yeah. There it is right there. So IWM on the daily had this one right here. All right, where you had this kind of rising structure. All right. And you had this rising touch point. Right now, again, you can manipulate that upper trend line to maybe go from here to there like that. But you had this rising channel right here, right? And then as soon as you slip below right here, right about here, look at the destruction that happened on IWM here. Right? Look at that big fatty fucking move that was made. Right? Huge move down. Right? And then it actually ended up being a way further move, right? 27% from that initial signal. But yes, there are rising channels. For sure there are. Yeah. I personally, like when I'm drawing these rising channels, what I like to do is I don't really like to focus on drawing the upper part of the channel. My focus is just drawing the lower trend lines. Because typically once those lower trend lines are broken, that's kind of a signal in and of itself. So like you can see it was broken on this one right here, right? So if we mark this off. So there was one broken here, right? And then you can see there was this trend line right here, right? That was broken right here. Then you can also see this massive one right here, right? That was broken right about there, right? And if we look back on those three green vertical lines on price action, look at the destruction that led after the RSI had broken through those lower trend lines, right? So we already did this one, right? This was fucking 27%. Then look at this big fat one. This is like 10%, right? 7%. And then look at this big one back over here as well, right? That was another 16%. So I don't really like drawing the upper portion of those boxes. I just like keeping the lower trend lines. And you can do the same thing with like those descending ones that we draw, right? So, here's a good example right here, right? Where, you've got all these descending touch points right here, right? And so, I mean, you can draw this lower trend line like this, right? Like you can totally draw that. But I think what's more important rather than the touch of that lower trend line is just the breakout of that upper trend line, right? Because you can see during that period of time there, we did break above it slightly right here. Right. And that did lead to a little bit of a nice healthy move, but then obviously it retraced right back inside. And then it caught that full breakout. Then it broke the center line. Right. So, I mean, pick your poison where, you'd want to make the argument there. But again, once it broke that trend line, you saw a nice healthy splash in price action. Right. And you can do this on a whole bunch of other assets. Like I'm particularly using SPY here, but like there's other like we just did this with GME on the weekly at that $10 low. Right, so GME on the weekly, when we hit that $10 low back over here, so yeah, when we hit this $10 low on the weekly time frame after the sneeze, there was this huge trend line right here. Now, I'm pretty confident that we drew it from here like this, right? I'm pretty sure that we did that because then we also had this lower trend line like this that we were marking off as well. I might have even taken it from here. I'm pretty sure that we took it from right here. And then we said, touch, touch. I think this is what we did. And then you guys can see again on the weekly at that $10 low, we also made some big bullish divergence between those two lows. So even when we got down to that $10 low, right, and support, you had weekly bullish divergence. You had a giant harmonic butterfly that had been completed right here. Okay, so you had a big harmonic butterfly at support with bullish divergence on the weekly. And then we paired all that with that weekly kind of RSI channel / trend line. We might have even drawn it like this. Again, I don't remember exactly what it was, but it was something like this. And then once you broke the upper side of that trend line, you actually still caught a good chunk of that GME move, because the break of that trend line actually happened here. So you actually could have ended up catching this into the squeeze move, which was 340%, right? So that the RSI, like wedges and channels and how we draw those things, your focus doesn't necessarily have to be on like drawing the channel itself. I would mostly just focus on the same way that you do with trend lines, right? Where you're just looking for multiple touch points, right? Like we can draw this lower trend line on this part of price action, but I don't really care about that. My focus is drawing the trend line across the upper portion of price action so that when it does break, I'll know when it has actually broken, right? So if we go back here, when we called this bottom back over here, oh, no, excuse me, that's the wrong price action. That is on the weekly. I need the daily because that was back over here in November or whatever the fuck that was. That was back over here, right? Yeah. So back over here in November and December, when after price action had this massive fucking sell-off, right? If we look at the RSI in the moments that was taking place, right? We had this right here where you got touch point, touch point, touch point, touch point, touch point, right? And so we draw that all the way across. All right. Now with this particular one, you guys can see that it faked out a breakout here and then also faked out a breakout here before making two more consecutive lower lows. This is where, right? Not only do we have that upper trend line on the RSI that we're obviously paying attention to for a potential breakout, right? But then this is where those trend lines can help us identify divergences. Because if we look at GME's chart, when we made these lows back over here, in that November, December timeframe, you had a low, a lower low, a lower low, a lower low, and a lower low, right? So 5 lower lows. And if we look at the RSI at the same time that all of that shit was happening, right? Oops. You have an equal low, right? You have equal low. So that's one weak touch of bullish divergence. You have a higher low. That's one touch of bullish divergence, or arguably 2. You have another higher low. That's 3 touches of bullish divergence. And then you have a 4th touch of a higher low. And that 4th touch of divergence happened right as you back tested that RSI trend line that we've drawn, and also right as you back tested the bear zone. 4 touches of bullish divergence at a supportive level. Then you add in that little RSI trend line. And the moment that RSI trend line was broken after we back tested, it was boom, boom city on GME. So the purpose of drawing these trend lines, right, and why we kind of do this is not just because we see it in a wedge or we see it in a channel or we see it making a head and shoulders. The purpose of drawing those trend lines is also to help us spot potential divergences that can help us give another potential signal of a possible reversal taking place on whatever asset or stock it is that you're trading at that moment in time. So does that mostly make sense there, guys? Does that mostly make sense? You guys kind of understand that? Does that mostly make sense there for you guys? Let's bring that back to SPY. So SPY is literally going nowhere, folks. And I really, really do mean that. SPY is literally going nowhere. You're breaking that trend line that we kind of drew. Jesus, Jackie, speak fucking English. You can manipulate that trend line a little bit, but it still looks like we're kind of slipping below it. So again, huge spot, 536.60. I've said it so many fucking times. It's the significance of that level cannot be understated. I didn't record. Nope. Not that one. Alrighty. Well, folks, I think we've run our course for the show today. I think we've hit our limit for the show today. So, can I get a round of GGs and TGs into the chat box? Can we get a round of GGs and TGs into the chat box? Oh. Still no significance of that 80X yet. It's still so far away. It's at 16 still. Love that the DMI positive is up there, but just no strength yet. Alrighty, folks. Well, thanks to the 1,000 or so of you that decided to show up and tune in and listen today. As always, really appreciate your guys' time being on the stream and being in the chat box. So for those of you in the Discord, I'll see you guys in the Discord shortly. For those of you not in the Discord, well, I'll probably see you guys tomorrow. Tomorrow's supposed to be another one of those day offs that's probably not going to turn into a day off. So I'll probably just end up seeing you guys tomorrow. That's probably what will end up happening. Also, don't forget to draw this little Gartley on the SPY 5-minute. It does look pretty clean. Completion is 5:35.25. So watch for that. So thank you guys all for tuning into the show. I really appreciate it as always, and looking for more at the end of this week. So thank you guys. Appreciate it as always. And we will see you guys tonight/tomorrow. All right. Bye now.